Ladies and gentlemen, we'll be starting in 5 minutes. We're just awaiting a few more guests, but we'll start in 5 minutes shortly. A very good morning to one and all. It is my great pleasure to welcome you all to this conference titled Driving Financial Inclusion in India's Hinterland, organized by Grameen Foundation India in partnership with Bill and Melinda Gates Foundation. Our conversations today aim to discuss and discourse on promoting innovative collaborations to empower communities with a particular but deliberate focus on women for a sustainable financial future. We have some extremely exciting discussions lined up for the day with stakeholders from diverse backgrounds, exploring themes such as digital technology, gender mainstreaming, and sustainability in the financial inclusion ecosystem. I hope that the day allows you, our audience, to participate with full gusto to make this interaction even more lively and collaborative. Now, without further ado, I'd like to request Induja Rai, Director, Institutional Relations, Grameen Foundation India, to deliver the welcome address.
Thank you. Good morning, everyone. On behalf of Grameen Foundation India, I welcome you all to the conference on driving financial inclusion in India's hinterland. The aim of this conference is to encourage dialogue, foster partnerships, share learnings, and highlight the emerging trends, opportunities, and sustainable solutions on enabling greater coverage and adoption of affordable financial services to the last mile. The conference is being organized in partnership with Bill and Melinda Gates Foundation, which is continuing its commitment towards promoting innovations to empower communities, particularly women, for a sustainable financial future in India's hinterland. Inspired by the work of Nobel laureate Professor Muhammad Yunus, Grameen Foundation India embarks the mission to enable the low-income households, especially women, to create a world without poverty and hunger. For the last 25 years, Grameen has been a pioneer of designing and deploying solutions globally, aiming at driving financial inclusion to the most vulnerable communities, especially women and the unbanked and underbanked communities. Grameen believes in providing people with the convenient access to services, building trust, building capacities of the last mile delivery network, and building assets, resilience, and promoting the financial health of the overall communities. Our work in India over the last 12 years has impacted over 1.2 million people across our initiatives under innovations in digital finance, agriculture and livelihoods, women's economic empowerment, and health and nutrition portfolio. Coming on to financial inclusion. So financial inclusion actually forms a key lever for achieving the vision of our Honorable Prime Minister, Shri Narendra Modi ji, to make India a USD 5 trillion economy across its three dimensions, which is like access to financial services, usage of financial services, and the quality of products and services that are delivered. Additionally, integrating gender sensitivity into financial inclusion efforts is essential to ensure that the women who have historically been excluded from the formal financial system have equal access to financial services and products, thereby empower them and economically and promote gender equality. The conference will be graced by Ms. Jayashree Vyas, MD Seva Bank, and Mr. Pawan Bakshi, India Lead FSP BMGF, who will be delivering the keynote address and the opening remarks respectively. This will be followed by two panel discussions by experts in various domains of the financial inclusion, and we will also have a fireside chat on comprehensive approach to financial health in the second half of the day. The sessions or the panel discussion and these sessions will cover topics ranging from innovations in financial inclusion space, India's financial inclusion story, the role of digital innovations and empowering the underbanked and unbanked, promoting gender inclusive financing, renewed focus on holistic approach towards financial health, and driving inclusive growth through sustainable solutions for financial inclusion. By convening a diverse set of stakeholders today and exploring critical themes of digital technology, gender mainstreaming, and scale, the conference will generate deep and nuanced perspectives on the complex challenges and impact of various interventions for the entire financial inclusion ecosystem. Therefore, collaboration of various ecosystem players is essential as they bring unique strengths and capabilities that can address the complex challenges of financial inclusion in a much effective manner. It will also ensure that the voices and perspectives of marginalized and underserved population are included and promoting inclusivity, equity, and social justice. This will allow stakeholders to also come together to pool resources, their expertise and networks, which will help in taking the whole initiative at big scale so that can become a scalable approach, and also the sustainability of the financial inclusion efforts in the entire industry. Therefore, I strongly encourage all the participants over here to take advantage of this opportunity and actively engage to exchange ideas, share their best practices, and explore innovative solutions. As we know, the challenges of financial inclusion in India requires a collective effort, and it is not something that only one organization or a single network can actually do. So by pooling our knowledge and expertise, we will be able to identify the most promising approaches and develop practical solutions that is actually scalable and that can make a real difference. So let's engage in practical, productive discussions, and wherein we are challenging the assumptions and coming up with the creative thinking. Today, during the day, we will also be presenting our learnings, in the form of reports and knowledge products. And we are going to have an interaction with the authors. So please feel free to have discussion with the authors who have come up with these products, which will be largely on women-friendly micro-saving products, gender mainstreaming in the BC network, assisted e-commerce and ONDC. Besides this, there's an interesting thing in the room, that is the experience zone for augmented reality and virtual reality for financial literacy and the businesses of the women entrepreneurs that Grameen Foundation has promoted under the Women's Economic Empowerment vertical. You will also find our recent app, which is called Grameen Guru. Currently, it's in the initial testing phase, but it offers an interactive learning experience in the banking and finance domain, and it aims to enhance women's participation in the banking, bridging the gender gap in financial inclusion space. So please do explore these experience zones. And towards the end, I would like to say that I'm really, really excited to express the optimism for the future of the financial inclusion in India, especially for the women, because they have been left out for ages. And India has made significant progress, in advancing financial inclusion in last few years. But I believe that the trend will continue and in the coming years as well. And by addressing the unique challenges that the entire sector faces today, we will be able to unleash the potential of women also to the fullest, besides the entire financial inclusion sector. And therefore, I encourage you all to please engage in these conference sessions, network with each other, collaborate wherever possible, see the avenues where we all can work together so that we are able to contribute towards the better financial health of India's hinterland. And we can come up with innovative solutions which are applicable for all, and ultimately benefiting the larger community, which is why we all have gathered over here. So I just want to thank you all again for your presence and contribution, and coming and making this entire event a successful one. I'm sure we'll have a lot of interactions and we'll learn a lot during the day. Thank you once again, and welcome to the conference.
Thank you, Induja, for always setting the context so beautifully. Proceeding ahead, it is my absolute honor and privilege to welcome on stage Jayashree Vyas, MD, Seva Bank, to deliver the keynote address on innovations in financial inclusion, India's financial inclusion story. Jayashree Vyas has served as the managing director of Shri Mahila Seva Sahakari Bank in Ahmedabad since 1986, a bank which serves more than 4 lakh women clients. During her tenure, she has taken active steps to introduce and operate an integrated micro-insurance scheme for women working in the informal sector. She has been instrumental in the introduction of saving groups of underserved women in more than 5,000 villages of Gujarat and the development of various housing finance schemes. Under her leadership and tutelage, the Seva Bank introduced a financial literacy program back in 2001, first of its kind in India then, and a micro pension scheme in 2006 for Seva Bank members. I would dare not stand in between her speech and the audience anymore. Ma'am, over to you.
Good morning. It's my privilege and pleasure that I have been coming here and I will be talking something about what we have learned. But I will, as you said, it is 4 decades where I'm working here, so I'm a little old. So I might talk about my past also. So please, bear with me. See, what we have been seeing is that it was even fifth decade in that where we were seeing that that there were so many women workers, they are all in informal sector. They're economically very active, hardworking, risk taker, and also contributing in the economy of the country. But what was happening was that they were not getting any kind of access to formal credit. And for this reason, they were getting to the money lenders. I think this is everybody knows, but I'm just starting with this. And what was happening was that then whatever, they were earning out of that, lots of people, money was going to money lenders. And also they did not have any tools which they can use. And so this was the time when these women decided, not as women, but basically Seva organization decided that we should organize all these women and we should work something on this. So this was the time this was there, but I forgot. Sorry, I forgot. I thank Grameen Foundation India as well as Bill and Melinda Gates Foundation for organizing this conference. So now I'll start again. Then what happened was that, they, all these women were going to, I'm talking about, 80s or 70s or 80s. Now bankers are very good, but not at that time. So at that time, what was happening was that, when they were going to banks and women went, and they were not listening to them. So all these women, they decided that we should start our own bank. I mean, it was something, they were all illiterate, they were very poor, and they themselves said that, we should start our own bank. It was not possible, but they were saying that, we want to do it. So I'm not going into details about it, but we did get, and this was there was 4,000 women at that time. Every woman had given 10 rupees, and all the capital was of course 40,000, and it was a cooperative bank. So, so we could get it. But the point was, what was happening was that when these women, so this was the time, it was not inclusion time. It was the exclusion tha. So what was happening was that even if so first thing we started was that because we saw that, they were in debt because, and they were caught in the vicious cycle of poverty. So the first thing we wanted to do was we wanted to help them come out of whatever debts they have. So the first credit we gave to all these women was that, they should give it back to the money lenders. So this was the first thing. But I would say at that time, financial inclusion word was also not very popular. So this was the first, I would say this was the first thing, that it was inclusion, because it was a bank, and from bank, the credit was given to these women. So that's also the first inclusion. But the second thing, which was very important and which we learned it, that, these women always wanted to save, but because they didn't have some, I mean, they were also saving somewhere, but then they were also not getting back, and all those things were happening. So when we also said that, of course, because this is a bank, you can also help them to save. And that saving started, it was 2 rupees, 5 rupees, but then now it's lakhs of rupees. Their fixed deposits are in lakhs, 5 lakhs, 7 lakhs also, but it is the third generation, I would also say that. So this was something which, we also realized that when it's not that only they need credit, they also need saving also. But often we saw that saving they are bringing, and then next day she is also withdrawing. So thereafter, we just started seeing that, there are other products also in saving, and they were working on it. I'll talk about that later. But, even credit and saving is of course important, but we also saw that, they needed other kind of products also, and they never wanted to do this. So the first thing was what insurance, but we were seeing that, there are so many risks coming to them, but they were, wherever any kind of risk, they would go to, take credit only, nothing else. So we realized that we should start something like a life cycle need approach, that, because it is their life, and in their life they have they have so many needs of all types of products, and they don't understand it, and they have never seen it. They have never their husbands or their parents also have never used of any kind of insurance. So we realized, we started it, but it was the time when even insurance persons were also not ready with this, that we will not, these women are not bankable. So first time it was, they were not bankable, then later on they were not insurable. So we always had to fight for that. And when we fought for that, at least LIC was very good, not very good, but good. So they gave us, yes, they gave us, and that was a small thing, Jivan Asha Card. So what happened after first year, there was a premium, of course. The premium was women had given, and when the year was completed, all women came to us, and they said, "Give us our money back. We didn't die." So I mean, then we realized that you start a product, but you don't know how they are going to use it, or how did they learn. So then what we decided that, this is the time when we should also understand insurance, and we should also then train them. So this was something which we started from there. But thereafter in saving also, there are lots of money they sometimes they had, but they were also withdrawing all those money. And then we also given all those kinds of products which we have. And now they have even doing investments also. They are also doing investment in mutual funds, not in others, but that also we have seen. And this the other thing which we were also seeing was that, that if we can say three things, one thing is that, yes, there are all kinds of products are coming in, but how to make use of this? That was also very important. So, and that was for that reason, we said it will be three things. The first thing is that, emergency. It's a life cycle needs. We started working on a life cycle needs. And in life cycle needs, the first thing which we were always seeing was, whenever there is any emergency in home, maybe it is natural, or maybe other also. What they were doing was that, again, I said, either they will take it out from savings if they have, or they would again go to money lender, because we were not giving all these kinds of products. So what we thought was that we will, and all kinds of products were then started also. So for insurance, we will help them. And we started micro insurance. Of course, it was not our own micro insurance, but we were working with others. Now we also have our own micro insurance. It was the first micro insurance. And for all kinds of insurance emergencies, now they have their, and now they have understood it. Now the concepts and everything, they were understood, but it is very difficult to, I would say that amongst all these products, insurance is the most difficult product. And this is something, it was very difficult for us to work on it. But what we saw was also that when one woman is understanding this, then they are going to other women also. It's not that, so it's kind of, they start working as a teacher to others. So that was very good. And that was the reason why the saving, the other was a saving. Because saving which we saw in our life cycle needs, we were seeing that the one saving was, of course, for all kind of festivals, and then and so many others. And pension was the last. So what we were then started doing, it was that the particular product, and the particular product is recurring accounts. They didn't know what recurring accounts were. So we started telling them that for 1 year, recurring account, and for other, or particularly marriage, when there was marriage in their families, they were always working. They were always borrowing from money lenders. So this was, we always started to understand that, why they want money and how can we make this. Insurance also it came. So the last thing is that only when it is some kind of productive purpose, then only you should give loan to them. So we were working on it, and we were doing it. But everybody was not understanding it, and everybody was not also doing it that time. So the last thing which we started working was, see what happened, that in spite of talking about all this, all products also, we were seeing that, maybe 10% of women were working on it, but 90% were not using all this. So what we thought was that, let 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 we do something like this, that they can understand. When we started understanding that what is that, maybe, I mean, we are in middle class and other class, and maybe their behavior, financial behavior is very different, maybe very different. We did not know it also. So we did some kind of a survey, and we found that, see, what was happening was the first thing which, whenever we said, when we asked them, they said ki, no, the first thing was they were saying that aaj kamaya, aaj khaya. They were, of course, they had some money every day, but they were not keeping it. So basically, there was no kind of an investment they were doing, or there is no kind of planning. This was, we saw almost in 90%, maybe 10% was there, but they were always saying that, paisa nahi hai, that kind of thing. So that was the first thing. But second thing, which was we saw was that when they needed money and they did not have that money, then they were again going back to moneylender. And the third thing which was there, that for any kind of life cycle needs, they would not use, they would only use maybe sometimes credit, sometimes savings, but they will never use insurance, and they were never using pension. So this was, and the last thing was that, they were only dealing with cash. They were never doing any kind of financial kind of service, product. So what we saw was that, then what we did was that at that time we started, it was, I think, Dharti company in Gujarat. So it was the time when we had much time. So then at that time, what we did was that, we we started understanding that how can we start financial literacy for them. And the first thing which was required was, of course, the first thing which was really what we wanted was for planning, because unless they will not do some kind of planning, so we were always, so we told them कि आज नहीं तो कल के लिए कमाओ, कल के लिए कुछ करो, kind of thing. So that, and we had lots of films and lots of other things which we started with it. So that was the first thing. Second was, and then we were also talking about concepts also. Planning is also a concept. But in saving, what we realized was that the power of compounding is the thing which will help. And this is definitely, we are seeing that, when they have understood power of compounding, now always they have been, doing it somewhere or others. The third thing was, of course, insurance. As I said, it was the most difficult concept, but finally, we were able to make them learn about this. Pension was the very difficult thing. The reason was that, what was happening was that, we had first generation, and in first generation, we saw that all these women who are, they were very active, and they were also doing lots of businesses and other things. But when they become old, they didn't have any money, and then maybe their children and others were also there, but they also didn't have that much of money, and they were getting into debt also. Not debt, but whatever. I mean, they were not comfortable with this. So what we decided, that at least for second generation, we should start working on this. And when we started working on this, when then what happened was that, there was kind of, we were doing some kind of group things and others, and when we were keeping on one side mother and other side the daughter, and then we were asking, and they were saying that no, the daughter would say that no, I have seen my mother is not very happy about this, so at least I should do this. And the mother were also saying, yes, I didn't do it, but I will help you to do it. So this kind of thing and lots of other emotional things we did. And we did some kind of a program for this also. But then RBI came. And RBI said that you cannot do any kind of a pension. So any kind of a product which is more than 10 years, you cannot do it. So then we were very unhappy about this. And at that time, this UTI, we had connected with UTI and they said that, yes, we can help you in this. But here also there was a concept thing. The first thing was that, the concept of pension, they didn't have any kind of, they didn't understand what is pension. Even if they were saying pencil, they even didn't understand that this is pension. And whenever we're talking about pension, they would say first thing is that, we don't know whether we will die, or we will be up to 60 years. So why should we do that? That was the first thing. The second thing which they were always saying that, no, my daughter will be giving to me, my son will also be given to this. So basically, they didn't want to do it. But when we started working on this, one was the product. The first was the concept. Concept to samajhne mein bahut der laga. But product they saw, and it was mutual fund. And it was 50 rupees we started, but now 5,000 rupees also there. But return was and NAV return was coming very high. And we had given them all those kinds of, papers where they could see that, yes, they had kept money of 500 and now it has become 700. When they see this, then they are nice saying, yes, we want to do it. So this is how we started working on it. And now we are also seeing that, this is working. But the other thing which we are seeing is that also the entrepreneurship, that those women who were in earlier stages, they were only doing work on job basis, contract basis. When some credit came, then they also started, expanding the business. But the second thing was that, when they grew, they also had the businesses were also starting. And the last thing which we are seeing, I'm not saying everybody, but at least 1/3 of these women have been becoming, entrepreneurs, not very big entrepreneurs, but they are at least working on the entrepreneurship. And what we have ultimately, what we were also seeing was that, of course, after that, in 1916, even that Rupee card came. So when we thought that, let us ask women also that they want to do it or not, because digital thing was definitely possible and we wanted to do that also. So the first thing was that, they definitely wanted to get this because it was ATM, they were going to ATM. And the first thing which they were feeling was that, because they are always going in the places. And so in that cases, at least they were saying that we can save our time. The second thing which they were saying was that, that our cost is also going down. But the third thing which we never understood was, they said that, they always said that, self-confidence has gone. Because they were saying that, say, for example, we had one machine where they were putting them their money in that. So that she was doing alone. So then she was saying that, no, I don't want to cash when there's a cashier. I want to do it myself. And I will do myself. And then she was saying, I feel so good about it. So that is something, we realized. And then we saw that, this is the thing which we should also tell them, and we start doing it. So now at least 45% of people, now all kind of, digital things are coming in. So they are already working on this. They have understood it. Of course, we had to give some kind of advice and training, but they are very happy about it and they are working on it. Now it is entrepreneurship wale. They also want some kind of applications, apps. so that, they can, because most important thing is that, they become an entrepreneur, but they always join with their own business and their personal business or personal money. And they were not putting accounting and everything in that. So when we were telling them that, is it possible that if we give some kind of app, then you will be able to do it? And yes, it was younger girls more. So they also started doing it. So has been trying, working that, how can these women be helped? And we are seeing that if we give them some kind of thing, they understand it and then they start working on it. They are more smart than us. I always feel that they are more smart than us. So this is something which I, I thought what I understood and what I have seen, I'm just experienced, I'm just telling. And thank you very much for helping me in this. Thank you.
Thank you so much, ma'am. I would request Induja to kindly felicitate our Jayashree ji as a token of our gratitude. Can we have a huge round of applause, please? Thank you, ma'am. It is always inspiring to learn from the journey of the Seva Bank and all the women who've led and been associated with the bank. The trajectory from financial exclusion to financial inclusion that you spoke about, there are important lessons to be learned from that journey for everyone in this sector. I would now like to take this opportunity to welcome on stage Dr. Pawan Bakshi, India Lead for Financial Services for the Poor at the Bill and Melinda Gates Foundation, to deliver his opening address on empowering India's hinterland, driving financial inclusion through partnership and innovation. Dr. Bakshi is a digital financial service specialist with a focus on financial inclusion, fintech mentorship, and fostering digital disruption. With a career spanning over 25 years, Dr. Bakshi's vast experience encompasses driving large-scale programs in areas such as strategy, regulatory and policy advocacy, infrastructure applications, etc. With a keen eye for innovation, he continues to champion the cause of financial inclusion and digital financial services, striving to improve lives and empower communities. Dr. Bakshi, the stage is all yours.
Hi, everyone. Good morning. And the introduction was very generous. I don't know if I deserve all of that, but here I am. So, and after you, ma'am, it's a tough act to follow. From the experience which comes from actually implementing stuff is very, very different than what I'm going to kind of share, but I hope it's useful for everybody in the room. So, ladies and gentlemen, esteemed guests and colleagues, good morning. And I'd like to thank the Grameen Foundation India to invite us here, and also running a conference here on driving financial inclusion in India's hinterland, and allowing me to come here and talk to all of you. Right? At the Gates Foundation, we believe that an economy that includes everyone benefits everyone. Our goal is to help expand access to digital financial services so the poorest people and women in India and around the world can build security and prosperity for themselves, their families, and their communities. To achieve these objectives, we work with partners around the world to align on common principles for digital financial inclusion and support the ecosystem as they work to address key challenges. Grameen Foundation in India is a key partner that is helping us and has been engaged in addressing barriers to financial inclusion. One of the recent projects that we are working with them is to improve the quality and viability of BC networks in India. The spread of digital technologies and the ongoing reform processes are removing barriers that once kept services out of reach of many people in the country, and you're aware of that. This is evident from some of the data which is now available. 80% of adults in India now have a bank account, with no gender gap across rural and urban India. That's a huge benefit that we have. But unfortunately, what we are seeing is that not all these accounts are very actively being used, and there's a lot of work that needs to get done. Well, one of the reasons why we've seen these numbers skyrocket in the last few years is because of the Jan Dhan Yojana, life and accident insurance, and digital payment skyrocketing, the Mudra Yojana all coming in and accelerating what we thought at some point of time would have gone and grown at a marginal rate, so to say, but it's all changed in the last few years. And since we are discussing financial inclusion in the hinterland, one of the questions that often comes up is that how does financial inclusion actually impact a poor household, right? So the results of one of the RCTs which covered the impact of increased rural banking access in southern India over 10 years, when it reported that expanding access to formal financial products and services to rural households not only crowds out informal borrowing, but also has a positive impact on savings, on people's own business activities, and on their ability to cope financially with health shocks. To talk about this, I'll tell you about a recent kind of field visit which we did just outside of Bangalore in a semi-urban, semi-rural kind of a setting, where small merchants, especially women merchant, urged us to buy and pay for the flowers outside a temple by using a QR code. And the reason I'm bringing up a QR code is because FSPs have issued about 220 million odd QR codes in the country as we talk today, and a lot of street vendors, small vendors, large vendors have them, right? And and why I bring this up is because in a following a conversation, she said that by regular saving, she's been able to get respect, agency of her money, and now feels empowered. And there are millions of such women who are seeing change every day. Just also, while we are at this, at the topic, I'd like to also talk about a survey which was conducted by the Bharat Inclusion Initiative at the IIM Ahmedabad. Found that women who own and use a bank account and fintech products are able to allocate resources independently of their spouses, right? And what they also found was that the expenditure on assignable goods, and when I talk of assignable goods, these goods are gender specific, such as specific articles of clothing or sanitary products and all, increased by 3%. Expenditure on toys used by girl children increased by 13%. Expenditure on education of a girl children increased by 7%. And expenditure on nutrition food, which includes milk, fruits and vegetables, and pulses and meat, increased by 12%. So ultimately, what we are saying is that if households are financially included, and specifically the control rests with the women, the entire household sees an impact of the benefits. Usually, change is a very slow process, and those who live within the ecosystem fail to see the changes, right? But we are living in interesting times as we are able to see those changes happening very, very quickly. As you know, Jayashree Ben spoke about it over the last 50 years. You've seen super change happening, right? And I think our generation who's in the room now is fortunate enough to see that change, which is happening at breakneck speed. I don't think that the other generation will see those things changing at such a lot of pace. Now, India's digital public infrastructure is playing a major role in ensuring that relevant products and services can reach the people we care about. without which access and costs of servicing those excluded populations which have been exorbitant. To give an example, KYC in pre-Aadhaar days used to cost about 700 rupees a person, which is now down to about 20 rupees. At this cost, everyone is viable for a bank. It'll be very, very difficult for banks to be able to serve people who just the KYC cost is $700, right? While we are getting in there, I think overall, while we've come a long way, there is still immense potential of what we can do in financial inclusion space. And I think actually, even if you talk about financial inclusion, it's become a much used, abused word. I think there are a lot of other things which we are seeing happening, which is allowing, enabling, empowering people to do what they want to do with their lives. I think that's the change which we are seeing happening as of today. And I think the advantage which we as a country has is today that there is a lot of activity in the digital public infrastructure stage. Our regulator is very dynamic. What we are seeing is a vibrant ecosystem of fintechs. And when I talk about also fintechs, it's about insurtech, health tech. There are whole loads of other people who are entering into the space and doing stuff there. And I think we have an opportunity here and now to transform lives of people in deep rural and remote areas, which otherwise would be very, very difficult to reach, right? And as I mentioned earlier, while a lot has been done, a lot more needs to be done. There are several other areas which need to be addressed, and I'm sure during the day to day, you will discuss it and talk about it and arrive at what you think could be the way forward. I think the first one is about digital literacy, right? And of course, what I'm talking about is not in any specific order of priority. I'm just listing out stuff which I think is important. So I think the relationship between people and technology has to evolve. We haven't done enough around that yet. So there are lots of people in this room who use tech, but who use tech to very specific use cases, right? But not a very strong users of technology overall. I think we need to reach a place where technology becomes human-centric. We've been speaking about processes and products trying to be human-centric, but I think it's time for us to design technology which is human-centric, right? And I think while the fintechs are talking about it and doing stuff around it, I think there's a lot more that we can do in terms of emerging technologies like voice for transactions and our role of AI to make transactions far more seamless. I know that there is an AI AR tool available here, and I think you'll all experience it soon. But I think overall, even when you use technology, one aspect is what I'd urge us to all to keep in mind is to be responsible, right? It's about the responsible use of technology, because we've heard how digital the lending and unstructured, uncovered kind of growth led to a lot of challenges with the people. So while technology can help, it can also cause a lot of pain if not used well. Then on the other hand, to ensure that no one is left behind, technical innovations must move from being gender neutral to being gender transformative. We have to keep the needs of women front and center in their design. It can't be an afterthought, right? Now that I have technology, now let's see how this will work for everybody, all the segments that we care about. Well, we started work on the BC networks, and the BCs have been increasing ever since. The last count is Sunil, 3 million odd. Yeah. About 3 million odd, and still increasing. I think there's still enough work needs to be done on improving quality of the BCs and the viabilities of the BCs, because unviable BCs, after spending a lot of effort and money and resources on them, if they're unviable and they shut down, it's not going to help anybody, specifically the businesses who are looking to expand in the area. Finally, I think data-driven regulation and policy making is essential for us to move ahead from here. The RBI has done a great job by introducing the index on both on financial inclusion and digital payments. But what we see is that there are still some gaps on the ground, and I'd urge all of us to try and identify where the gaps are and what do we need to do to address those gaps. Coming now to the end of my this talk, we at the Gates Foundation remain committed to supporting financial inclusion in India by scaling interventions that have worked in the past, and also ensuring that emerging innovations work for the poor and women. And to end it all, I'd urge you and encourage all of you to engage in meaningful discussions, share your expertise, work together, and create innovative solutions that can change lives of millions of people in India. I'm optimistic about the future, and I look forward to positive impact that we can all create by working it together. I wish this conference all the best, and I'm sure that by the end of the day today, we would have had some wonderful insights and sparks of innovation which will emerge. Thank you so much. Have a good day.
Thank you so much, Dr. Bakshi, for the insightful address. I'd request Purna to please felicitate Dr. Bakshi. Can we have a huge round of applause, please? Oh, okay. Thank you so much. It is absolutely exciting to hear about the strides that Gates Foundation and Grameen Foundation India have taken in the sector, and we look forward to many such collaborations and partnerships. Dr. Bakshi spoke a lot about innovation. At Grameen too, we constantly strive towards innovation. In a world which is best characterized by VUCA, being volatile, uncertain, complex, and ambiguous, constant innovation and change is perhaps the only way we can best serve our clients, our beneficiaries, our communities. So I would like to take this opportunity to introduce you to one such innovation that has taken shape at Grameen Foundation India, the Grameen Guru app. It is a game-based learning app on financial literacy, and it is a pioneering attempt to use augmented reality and interactive gamification on the subject. The app is available on Google Play Store and can be scanned from any of the QR codes printed on the digital standees near you. The app is still in its testing phase, so you may experience some delays and bugs, but we would urge you to kindly download the app and give us your feedback. It would mean a lot. We'll now take a short break before we commence to the next exciting discussion. Tea is served on the left section of this room, so please help yourself with some refreshments and we'll collect at the same hall. But before I let you go, I'd like to announce that we have two very exciting exhibitions going on. The first is the experience zone on augmented and virtual reality in financial literacy. And the second are stalls that have been put up by women entrepreneurs to display their products. So please feel free to go through these exhibitions while you have your cup of tea. Thank you. I'd request everyone to please settle down. We'll start again. I'll request everyone to please be seated. We'll start with our first panel, requesting everyone to please be seated. We're starting in 2 minutes. Please come back to your seats. We'll start with the first panel for the day. I'm starting. Organizers, please assist everyone to their seats. Ladies and gentlemen, please be seated for our first panel for the day on equality finance, bridging the gender gap. Moderated by Poorna Roy Chaudhary, Associate Director, Gender and Women's Economic Empowerment at Grameen Foundation, India, the panel will deliberate on the gaps, challenges, and way forward for advancing financial freedom through gender sensitivity. With nearly 2 decades of experience in gender, women's economic empowerment, child rights, and youth development, Poorna has worked with multiple stakeholders in communities across cross-cultural settings at the local, national, and international level. Through her relentless efforts, advocacy, and strategy, she strives to visibilize and transform gender relations across settings. Let me also invite on stage our esteemed panelists, Chetna Sinha, founder, Mandeshi Foundation and Mandeshi Mahila Bank, Sameer Nagpal, Chief Business Officer, Spice Money, and Ajit Agarwal, lead strategic partnerships and policy advocacy at Women's World Banking. Ladies and gentlemen, please give a huge round of applause for our panelists. Poorna, over to you to steer us through an engaging, exciting, and interactive session.
Fine, how are you?
Well, thank you so much, Tanvi, for yet another very, very generous introduction. And thank you to all our panelists today for joining this first panel of the day. I will not delay any further because I know there is a lot to discuss. We only have 45 minutes in this panel, so I will kick it off. So the government of India in 2014 announced the Pradhan Mantri Jan Dhan Yojana. And the 2022 August data says that more than 55% of that account holder are women. And despite that, the access and usage of these bank accounts by women customers, they're limited and it is also not active. Now, again, in October 2022, the government of India announced its desire to raise the representation of women VC agents in the network to 30% by 2027. And today we are sitting at less than 10% of women's representation in the VC network. Now, with that context, I will kick off this panel discussion because here we are going to talk about why is it important to have women VC agents in the network itself, what are the current challenges and barriers that we are currently faced with, and what are some of these best practices that we want to learn from to take forward the whole agenda of financial inclusion in the VC industry. So let me start with you, Ajit. So we know that you have represented Women's World Banking in the DFS constituted working committee of the VCs. And so what do you think is the take of the supply side stakeholders in having women agents in the network and on the various gender sensitization aspects of it? And particularly, do they at all see the value of having female VC in the network and a potential challenge to advance financial inclusion? What is your take on that?
Hello, thanks Poorna, and thanks Grameen team, for inviting me and all the panel members here, Chetna ji and Samir, who are veterans in financial inclusion work. So, first of all, Women's World Banking, we were privileged to kind of be part of this DFS Constituted Committee in 2021. That is when all this started. Discussion on, DFS took serious interest that time that, that we should see this channel as a potential channel to reach the end, end Jandhan customers primarily, because there are around 47 crore, such accounts, and around 24 crore women accounts are there in the Jandhan scheme of things. And I clearly remember, before 2021 until 2020, they used to say that BC are prerogative or CBC are prerogative for banks. These are third-party channels, and DFS should be only looking at banks, not channel. And I think after COVID, when they saw that with all the relief transfers happened to the women account, BCs came into play very hugely. And I think that basically transformed some thinking, some intentionality towards this particular channel within DFS. And that's how, they thought about constituting this committee. And the big success was having a specific topic on women agents in that particular committee, that, how can we, address women agents, more women agents in the overall women VC workforce. And Mr. Shetty, SBI chairman, was he was the chairman of the committee, and from the DFS, it was additional secretary was leading it. So during the discussion, we had that evidence. Women's World Banking also brought that evidence in terms of, from our work with, 3 banks. And that time it was Bank of Baroda primarily that we worked with. And we showed them that there is certain evidence in terms of, women beneficiaries or women, not beneficiaries, but women are, they are very reluctant in sharing their financial information with male VCs. So they don't completely share it. Also, the fintechs data also kind of supported that, that only 28% are using or adopting their bank accounts. In terms of, depositing money or, using it for any purpose, which was much lesser than the men accounts. So, and they also realized that if there are 24 crore women accounts, and there are only about 10 to 12% women agents, and SBI also had some evidence from the ground saying that, that is also one of the reasons that, why these women agents, why these women accounts are not being, utilized properly by women themselves, because they feel reluctant. They don't want to kind of share all the financial information with the male VCs, or they feel that the male VCs only talk about cash in, cash out, very transactional, not relationship oriented. They don't feel that comfort. And I think that is how, that idea emerged. And Women's World Banking was successful in influencing the committee to at least have 30% women agents in the workforce in the near future. And therefore they agreed that, from now on until whenever the committee, like you said, October 2022, that whenever they agree on the numbers, they should give at least 3 crores out of 10 crores to women agents. They also particularly pointed out that they should leverage the BC Sakhi workforce that is being created by NRLM, and therefore they also suggested if NRLM or somebody can take this kind of a role of creating a database of all the BC Sakhis, GP wise or district wise, that is something that could help these their corporate BCs or banks to kind of recruit more BC Sakhis in the channel. So overall, what I saw was there was a lot of change in their thought process. There was gender intentionality when they talked about women. They also talked about, and they also said, some practical things. What they also mentioned was to introduce some soft skills or, some training for male BCs, which how can we make them more relationship oriented? Because, we can't deny the fact that 80-85%, in our system. And for a long time, they will be there, and, this 30% is just, emerged. So it will take some time. So can we now work towards making them more relationship oriented, like any other bank manager, like a pseudo bank manager? That bank manager will not only talk about, just cash in cash, but he'll also talk about other products. He'll try to kind of develop that some level of patience like women have. So these were also, discussed and kind of put in the report, saying that, we have to develop certain programs and certain training programs which are more on product pitching, which are more on, how to make them more relationship oriented on a soft skill aspect. So overall, in a nutshell, I would say that that the thinking is changing, and I think and we should celebrate even these smaller wins, because it was never there, a couple of years back. So yeah.
Ajit, thank you so much for that. I think two very important points that you highlighted. One is that relationship and that trust that automatically a woman customer has, when there is a woman BC agent who's kind of interacting, and that also kind of takes a huge jump. Sometimes we don't give it enough weightage that what it a simple thing, which is the most complicated thing, a trust and a relationship can do to make that change on the ground. Second is, I think you really rightly highlighted that it's the fact that we are sitting with more than 90% of male BC agents in the network currently today, to have a gender sensitized training program for them. The fact that they are currently at this moment, they are catering to a vast, intersectionality of our customers. That is a very, I think, insightful, comment that you made. Thank you so much. So, Samir, let me come to you. So, I think Spice Money, which is a rural fintech company, you're also very strongly committed towards driving financial inclusion. So, what, according to you, are some of these gender-related barriers and challenges that exist within the VC network today? If you can talk about some of those challenges, and what could be those innovative solutions that we can chalk out to overcome these barriers? So, Samir.
Sure. Thank you so much. First of all, thank you to Grameen Foundation for inviting us here and share and express our views for this very important point for discussion and deliberation. We at Spice Money, we are a rural fintech brand, and we've been in the market for the last close to 10 years. We have a wide network in the rural market. But before I talk about the challenges being faced on ground, let's also understand the huge gap in the demand and supply. So the demand is 58% of your Jan Dhan consumers today are women. We have in the last quarter crossed a very historic landmark, which says that the balance in these accounts is 2 lakh crore. So that is the first demand from these rural consumers, which are predominantly women. The second demand gap is on the consumers who are getting loans from MFI. Today, most of the MFIs have started to lend to women customers. But now when you think of the supply side only has sub-ton 10% BC agents as women. So therefore, there is a huge disbalance which exists in the ecosystem. And if we have to start imagining this network of BC to start working outside of only selling Kiko, this women BC agent has a very, very important role to play in. Now, let me come to the challenges. The first challenge is the mindset that exists with all of us. We've largely been a male-dominated society for the last 100 years. The patriarchy that is creeped in has built shackles in our mind, wherein when you think of the bread earner in the house, you will always call out that the bread earner is a male. When you think of who is the supreme is the male. So all of this has laid a lot of inhibition for the women to really come forward, become independent, and build an identity for themselves. If we just start thinking around this, I think we will start to find solution. The other challenges which really exist for women BC agent are the tangible challenges with them. The activities that they really go through on a day-to-day basis. The tangible activity of a womanhood, the tangible requirement of getting married, the tangible activity of being a motherhood. And these are some of the challenges which are very, very specific and also are there with the women also. And that is also one of the reasons that they don't really come forward and they start to act as BC agents in the network. Now, what could be the innovative solutions to this? I think while it may sound radical with what the MFI industry did, they said that we will now only start to lend to the women consumers in the rural market. But if you just think of this, what has this done to this woman? A woman who was yesterday only engaged in the household chores, she's got a financial identity now. She's become an earning member for that family. I think we'll have to take similar steps for the BC industry also. And some of these steps that come to my mind is not very radical. I think we'll have to first start enabling them. And what does this enablement means? I think the first enablement is educating them that this will give you a financial identity. You can become a role model for yourself, for your family, and also for your women peer group. Educate their family members. And now this education could be very different. It could be very region specific. And that is something I think we will have to work upon. It's a journey that we'll have to travel together. While the aspiration set by RBI, I will say is very, very aggressive. Moving from 10% to 30% is aggressive, but if all of us lean together, I think this is doable. We may not reach 30%, but we will definitely do something which is much better than what we are at today.
Thank you so much. You touched upon one of the most difficult barriers to overcome, which is when you talk about patriarchy, it's a systemic barrier for women to flourish and be empowered in the first place. And of course, by 2027, to achieve a percentage of 30% from less than 10% today would really require unpacking many of these gender norms that we keep talking about. And rightly said, I think you also kind of see the route to this enablement is through financial independence and also through economic empowerment. So if there can be a concerted effort to do that, so maybe there would be shifts that would be happening at the entrepreneur level, the individual and the household, and going forward in that chain. So thank you so much for those highlights. Chetna ji, when we talk about products and services in the banking sector, and we often say that these products and services need to be women friendly. So what is a woman-friendly product service? What are the needs of the woman on the ground in terms of the products and services? And, the kind of work that you do, in Mandeshi, you're servicing 100% of women customers. So no one can have a better voice than you to kind of speak from the lens of women customers. And do how do you think that having women agents in the network would facilitate that financial inclusion of this underserved women customer segment? Over to you.
Thanks, Purna. And I'm thankful to Grameen and Gates Foundation for inviting me for this panel. When listening to Samir and Ajit, I'm glad that we are talking about women sakhis or bank sakhis or business correspondents, and we'll have 27% by 30%. But I would say I'm also glad that we are not talking like quotas. But I would just like to share that when we started Mandeshi Bank, first thing our women said that if we come to the bank, we lose our working day, right? So we lose our working day, but we want to come to the bank and we want to do savings. So when I said that, and that was the time when we appointed bank sakhis, that if you cannot come to the bank, bank will come to you, and that is a doorstep banking. And then when bank comes to you, and as you mentioned about the trust, then it comes with technology also. But the whole thing is that why do we need BC Sakhi is that our women want to save at the last mile population. And for savings, you require the women BC Sakhi to go there. Men can go to the bank. They have a mobility, but women cannot go to the bank. Not that they are stopped, but only because they have to earn for their daily thing. As Jayshiben said that I have to earn for my today, and I will have to earn tomorrow also. My salary does not come. So I do think that is the saving is the key part when we talk about the BC agent or a bank sakhi. That is one. Now, while saying that, as you mentioned, you are asking about product and services. So it was very interesting for us to learn. Like when you talk about the savings, generally bank talk about the recurring deposit, RD, monthly savings, right? But our women do not want to do those savings only. They want to save daily. How do you provide that services? So you have a BC Sakhi who do the daily saving collection. Now, when they do daily savings, which means that they need to have, again, proper systems, real-time transaction, incorporate all that. I'm mixing it with that use of technology also. So they have this device with them and they provide a daily savings. Now, today, women are not only having passbook, but they are having electronic cards, or they would have their own wallet. So another thing comes in that daily savings with the technology, with the wallet. Why wallet? And in this, I'm talking about the services, how women look at their savings. They want to control their savings. So they are very clear. When we were setting up this whole system of savings with our women and with our bank Sakhi, our women were very clear that while opening my digital wallet, I don't want only PIN number. We said, everybody will help you to remember PIN number. They said, no, we also want biometric. Why? And when we adapted that biometric, you know what our women said? That when I use biometric for my savings, and then when I get a voice SMS after I save, it gives me, मेरा PIN number तो कोई भी चुरा के लेके जा सकता है, लेकिन मेरा अंगूठा कोई नहीं चुरा के ले जाएगा, right? So that is where I think when we talk about the BC Sakhis women and saving for women is that control on finance is very important. So while designing the product and services, you do in such a way that women at the last mile who are saving their hard-earned money, they have a control on their savings. That is one. Now, the second, I would come to the second part, that the biggest challenge, if you compare the field officers of microcredit institutions and BC Sakhi at the doorstep, The biggest challenge is that how are they going to be paid? How are you going to make them viable, right? So there again, the product comes that can we bundle the product? Saving, because saving does not give income to the institution. Then credit, pension, and insurance, as Jayashree said. And in that case, when our BC Sakhis are providing this bundle of products of services, product and services, which has to be provided at the doorstep to women based on their cash flows. So they are saying we want to save daily, but they are ready that in my saving account, I will save daily. And we also have a pension product. So they save in a pension product also daily. So they will be handling two accounts. So in that case, again, I would say that when our bank Sakhis go, it is very important that these products are designed in such a way, either it is saving, or it is credit, or it is pension, or it is insurance based on their cash flow. And lastly, I would also share one another example, that when our bank Sakhi went to provide the doorstep service, women talked about the savings. But when we talked about the micro joint liability group loans, you know what? Many of our women said, I don't want that group loan, but I want to buy goats and I want loan. Why goats? Goat, bakri. Why? Because the income which comes from my goat is in my control. I sell goats, I buy goats. So while providing this product and designing the product, it is very important that what type of product you are designing. So when we design the goat loan, we also had said that, yeah, there won't be a group, there won't be a peer pressure. But because we are providing what she wants, and she wants to do continuous banking with us, so she's not going to default. It's not that she will never default, but bank Sakhi is there, financial literacy is there, and you are tracking her cash flow, you are tracking her savings, and you are meeting her daily. So with that, I think then you can make it viable also by repayment of the goat loan, by repayment of the loans which are given to women. Bank Sakhi can also get commission from them. And I am surprised that when we were designing the credit product for the BC Sakhi to give it to our women, they were ready to pay the commission of the BC Sakhi. So I think it is very important that how it can be made viable, and with the technology. And I also want to say that it will take, when you design the product and services, you keep in mind the cash flows of women. That is number one, but also the spirit why she wants it, because that is very important in as far as women are concerned. I feel that, see, Jandan account has worked, but Ujjwala account didn't work. You know why? Because women said that wo to मेरे हस्बैंड का भी नाम है उसमें, मैं उसमें पैसा नहीं बचाऊंगी, मेरे नाम पे मेरा अकाउंट चाहिए, क्योंकि उसमें मैं सेव करूंगी ताकि मैं तय करूंगी how am I going to spend. So when I see BC Sakhi, I see most important factor is, while designing the credit product and services, two things are very important. It is not just access, but control on finance. And second is, if women are saving, they are also deciding where to spend. So decision making also comes there. So with that, I would say that I am very hopeful that it is not 30%. If we want all the population, the whole population of India and women to save, we may go beyond 50%. Thank you.
Thank you so much, Etnandi. But no, these insights are absolutely invaluable. You know, the fact that you say that is one, of course, there is a daily need. The one has to be really mindful about the fact that it's an everyday engagement with the women, and that's phenomenal. And second is also the fact that there's so much dignity in being able to have control over the finance and the decision making. I think we often not give that due position of the woman in her own self and life and in the household itself. I think that's where, you know, your work also takes us to, you know, kind of hold the dignity of the woman so highly and so respectfully. Thank you so much for that insight. You know, talking about the BC Sakhi itself, you know, so Ajit, you have worked a lot, with the BCs and the BC Sakhi in the UP region. So, based on your ground experience, what are the key, success factors of this network? And, more importantly, is it to retain them, how important it is to retain them in the network.
First of all, thank you, Chetnaji, for a wonderful, ideas about how can we make them more viable. And I think this is something that we would like to kind of embed it in some of our programs as well. But going on the UP project that we did, we worked around with 1,700 odd BC Sakhis there. And we first tried to kind of identify what are the enablers or barriers. We first tried to kind of understand that. What is that, has encouraged them to kind of become BC agents? What are the factors which are, constraining factors for them? What is a break-even point that, if I don't meet this, I will be out of the system. So when we did, some sample districts of around 250 odd BC Sakhis, we realized that at least in UP, in the Western UP region that we were working in the Meerut, Shahjahanpur, Bareilly region, there we saw that, the break-even point was around 2,300 is what they said. They said, if I earn anything less than 2,300 after 6 months of my stipend, then I don't want to continue. But if I'm able to sustain anything above 2,300, is something that I would like to continue and be in the system. And so we knew that this was one of the breaking points, and this was answered by around 70-75% odd women. And other women also said that 4,000, 3,000. So there were different responses, but at least what we heard was around 2,200 was the break-even point. So that was one of the good points for us to kind of start with. The second thing, when we entered UP, we had very little control over the recruitment because they're already recruited. So the thing that we could do was to see what is that we can do to kind of retain them. So then we try to understand their, what are the enablers. So in terms of enablers, what we saw was, that they had the ability to reach, the hard to reach segments, intimate, villages. And, and plus they enjoyed, since they were part of the SHG group, so they enjoyed a trust in the community and those kind of things. So these were two things. Other thing was that, and she also had some pre-assigned market, because pre-assigned area where she was there, and she can basically capitalize, some accounts there. In terms of some constraining factors, which we saw at least in UP, which is not the case in Maharashtra, because we're also working in Maharashtra. But some of these factors were constraining factors in UP. One was definitely the need, their husband's support to go to any training venue, or for any to go for a branch visit. So mobility challenges were there, where there were lot of dependencies were there on the husband and family members or their brother. So that was one. Second was these were, most of them were first-time entrepreneurs, and they not all. 70-80% did not completed their first 6 months. So first-time entrepreneur, that street smartness was missing in them. So they were very keen to kind of understand how can we kind of improve our geographic area and our viability, our commission, those kind of things. So that was the other constraining factor. The other thing was that since it was a new concept, what we saw that there was a lot of support from the SRLM side. So UP SRLM was supporting, NRLM was supporting, but not much of a support from the corporate BC or a bank side. So, but what we saw that some branches, the regional head was was constantly kind of, based on our nudges, they kept calling the branch heads to kind of get them, to have a meeting with all these BC Sakhis, feel them included, and see, whatever issues they have, you should resolve. But those were all based on our nudges. It was not coming very naturally. So these were some of the constraining factors. And then we we designed something called a mentoring program. Because we always believe in digital financial capability, not exactly training. So these things are, when we say mentoring, it's mostly on very practical issues. So we designed a 4-week mentoring program there in UP to understand basic simple things. And what we did was we identified 25 star BC Sakhis who were who were tech savvy, who understand, who were a little a notch above than other BC Sakhis, and we attached around 10 BC Sakhis with each of these 25 star BC Sakhis. And then we basically helped them train on and we mentored these 25 BC Sakhis on what is your vision, why are you here, why have you become BC Sakhis. Second one is how can you earn more. So that was a second week of training. Third week of training was more on how can I improve my pitch, how can I improve my marketing skills, or that kind of aspect. So behavioral aspect. So these were 3-4 elements that we tried and tested, and we saw very good result. Around when we entered, around 12 to 13% of these women agents were earning less than 2,000 rupees. When we left after 4 months, 28%, not of course not a big number, but at least 28% was the number who were earning around 2,400. And I mean, we are disappointed with that number, but still there was some marginal improvement there, and we thought that, and we were able to identify some factors. So the factors included, what we saw was one of the important factors was distance from the branch. So there are a lot of male BCs already, and what we saw was the sweet spot was somewhere around 3 to 5 kilometers. If they are around 3 to 5 kilometers from the branch, then that is something that is workable in that particular geography. So that was one. Second was family support, of course. So wherever we saw that wherever husbands are supporting or if the family is supporting, there the BC agent is more successful. So that was a second point. Third point was on the location of operation. So basically, if they are operating, because some of these women agents were also aspirational about, can we have our own shop little bit outside the home so that I can cater more women, men. So wherever the BC agents, wherever the women BCs, got that family support or financial support in terms of getting some some financial support on the capital infrastructure part, they were most successful. So these were 3 things. Other than that, the other enabling factors was the branch support. So branch support was one of the other factors that they needed. The one other thing was the marketing support. So they said, so what we also tested with, we did some control and test setting. We gave posters and banners and an umbrella to few BC Sakhis and tested whether if they can organize a camp and they can get more customers vis-a-vis other BC Sakhis who are just doing some level of munadi and trying to get women more. So we saw that visual aids or these banners, having that umbrella, having that camp script in front of her was very effective in getting more customers in. So these were some of the 4 or 5 factors that that we saw that would work, at least in the context where we were working. Whereas in Maharashtra, there the break-even point is around 5,000 rupees. And I think Chetna ji mentioned that in the area that she works is around 6,000, 7,000 rupees. So I think that is pretty much similar. So we have to tweak some of these things when we work in any other geography, because in India, every state is a different country altogether, and we have to tweak all our solutions there. So these were some of the success factors, I would say. And one last thing is, what we saw in UP was 6 months is not enough time for their incubation time. They at least need 8 to 10 months of support to get established. 6 months is when they are, fully aware of what is happening, what is around the vicinity. They get their arms and ammunitions, those kind of things. It is after 6 months is when they start doing actual business. And therefore, it is imperative that if we can support them for, say another 3-4 months, after 6 months, is when we can kind of help them retain in the system. Otherwise, we'll lose them, and if we lose them, it is very, very difficult to kind of get them back on the track. And that is where we kind of also proposed a performance-based incentive for BC Sakhis just based on transactions. So we proposed, we have already proposed this to government institutions as well as, our banks where we are working with, that can we look at, say, INR 2,000 rupee every month for, say, 50 deposit transactions of at least INR 100 value. So that means that, BC Sakhis will have to do these transactions, but they are, in a way, they're getting some vision of getting a fixed salary of 2,000 rupee doing, certain transactions. So this is something that we have proposed as a recommendation to the policymakers and the banks that we are working with, that if this is possible. The other thing that we, at least what we are seeing in Maharashtra is, the bank, the Maharashtra SRLM is facing a lot of difficulties in procuring, devices, biometric devices for BC Sakhis, because not all SRLMs have that NERETP support or World Bank support or, the funding support that they have. Bihar is doing good, whereas Maharashtra is not doing that great. They're picking it up. But so we are also, trying to kind of identify whether NABARD can become one of the financial inclusion fund recipient. Right now, FIF fund recipients are all FSPs. All banks and, are of the FIF recipient. Can SRLMs become one of the recipients of the FIF fund, because they are doing a lot of digital financial capability building of women agents. They are recruiting them. They are also trying to kind of, provide them with biometric devices, those kind of things. So this is something that we are trying to kind of propose and see where it goes. So these are few things that I have to say. Thank you.
Ajit, thank you so much for those insights and the success factors or the best practices that you already have, evidence of. You kind of already working towards proposing that to the government. I think in continuum, it will be good to hear from the other panelists as to, what would be those possible recommendations to the government and other policy influencers in the ecosystem to kind of make this entire network, of course, gender, inclusive, and then kind of achieve the larger mandate of financial inclusion. So Chetna ji, what would your recommendation be?
So I would say, like what Ajit mentioned, I would also say I would extend to 1 year. 1 year support is very important. And why I would say that is that you don't want many dropouts. That goes a very different message goes across the villages also, right? That ye viable nahi hai. That is one. Now, regarding the recommendations you are talking, I would say that actually NABARD is already setting up a fund at a social stock exchange for financial inclusion and digital financial capacity fund. So I think it is very important to see what are these innovative ways where we can create such funds for training and capacity building. But the third, which I would like, which Mandeshi has used it, and with the BEADS program of Grameen, we have been using it, is very much, we have a chatbot on WhatsApp for financial literacy and advanced financial literacy, which women can get on their mobile phone, and even BC Sakhi, Bank Sakhi also has it. So that chatbot creates a three-way dialogue, Bank Sakhi, and women clients. So that way, I think, and chatbot talks about, I'm not going into the details, but we have seen that our women who have never been to the school, high school, but they are using chatbot. They are asking question on chatbot. They are taking the course on chatbot. We have Deshi MBA on chatbot, getting the degree, and you get the certificate also. And if they want, they can come and take the physical certificate. So with these examples, what I'm trying to say is there are a lot of different ways if you have a partnership with, say, the digital companies, Google, WhatsApp, and government also, like with you, because everybody is member on UPI. So I do think that integration will make a difference. But with all that, one learning I have got from our women with Mandeshi, impacting 1 million women entrepreneurs. And that is that education has not reached them. But if banks reach them, if they provide the control on finance, then I would say that what our women always say that, bank has to learn one thing. This is a lesson for us, for the bank I'm talking, is that never give poor solutions to poor people. So with this, I would say with Bank Sakhi also, we should keep that in mind. And I'm talking, not 27, maybe we will be able to reach before 27, which I'm looking forward. Thank you.
Naji. Samir, what would that be?
No, I fully agree with Chetna ji and Ajit. On the recommendation front, I'll start with something which is very basic. I think we'll have to see these women BC agents as our employees, the way we nurture our employees. It has to start from there, because the first and foremost step is enablement. And this enablement is around, one, educating these women BC agent that you are getting a financial identity. From merely being a household woman, you're someone who will be running the business on your own. This enablement is also convincing their family members, right? That look, by allowing them, you are creating one more earning member in the family. So that's the first piece. The second step to this is around helping them with small ticket loans, which help them in infra setup. Maybe a device is required, a handset is required to run the business, followed by a working capital loan. And here we can really follow a JLG model, wherein one women BC agent who's been successful recommends the another women BC agent, becomes a role model for that women BC agent and also to the peer group. The third recommendation is around how do we really help them save for their children education and also their future. Can there be some kind of a fund wherein a decent proportion is coming from these women BC agent as part of their earning, but there is a certain proportion which also goes from the government. Again, this is a policy aspect which should be taken. But if we start our employees, we think of their gratuity, we think of their funds, we think of their superannuation. I think that will bring a lot of stickiness into the network. They will be feeling far more engaged, motivated, and the dropouts will be next to nil.
Thank you so much. And this timer is quite unnerving. I can see only 1 minute on that. We can take 2 questions. Okay, so I'll open it up to the audience for any question to the panelists, please. We have one hand raised there.
Oh, wonderful insights. My name is Anup and I work with the Grameen Foundation. To be very at the upfront, I'm not a financial person and I'm not in this sector, although I work with health and nutrition. But then what I find is that it's okay that VCs do come at the doorstep, but are we negating the branches and the people at the branches and the manpower at the branches? If not, then what sort of steps government consciously need to do so that the human resource at the branches can be woman friendly? So what I find, I was going through certain literatures for the past 2 to 3 days and trying to reflect and learn on this aspect as this panelists were talking about, is that how many of the branches or how many of the banks do have all women banking branches? How many Indian branches have or banks have all women banking branches? First point, I know there is a data. Second, if arbitrarily I go or you go to a bank or say a rural woman who is very poor, not very confident, not very upfront like an urban elite, उनको कैसे लगेगा अगर वहां पर जाके एक महिला नहीं मिला और उनको पुरुष पूरा दिख रहा है, वो खुल के कैसे बात करेंगे? मेरा ये कहने की कारण ये है, I'm not talking about from the perspective of how, because I was working in हिंटरलैंड ऑफ झारखंड, जहां पर की महिलाएं बैंक में जाने में डरती है वैसे। What sort of inputs government take into action? So that would be my point to the panel. If means BCs तो है and BC को बढ़ाने की जरूरत है, that's point. But बैंक के अंदर किस तरीके का माहौल और कैसे हम लोग कर सकते हैं ताकि वुमेन फ्रेंडली हो सके, राइट?
चेतना जी, प्लीज।
पहले तो मुझे अच्छा लगा कि आपने ये सवाल पूछा, थैंक यू फॉर दिस क्वेश्चन। लेकिन और जो आपने कहा कि बैंक में महिलाएं जाने से डरती हैं, और ये बात बिल्कुल सही है, पर मुझे ये भी लगता है कि क्यों डरती हैं। मुझे लगता है कहीं ना कहीं इट्स नॉट मैन और विमेन, बट यहाँ ये भी है कि बैंकिंग इंस्टीट्यूशन दे ऑपरेट एज, instead of providing the customer service, I market my product and I want my customers to take those products. और वो product मैंने जो design किया है, I try to fit in them into my product. अगर वो नहीं, उनके cash flows भी नहीं fit कर रहे हैं, तो भी मैं कहूँगा कि यही लो। So the first thing I feel is कि bankers need to listen to the clients. आप अपने clients का सुनिए, वो क्या बोल रहे हैं, before talking too much about our products. I think वो होगा, then people would feel that how I can come to the bank. And second, I feel कि उसमें government से ज़्यादा I feel that competition has to come from the market. Market में अगर ऐसी बैंक रहेंगी कि वो अच्छे से customer service देंगी, उनके पास लोग ज़्यादा जाएंगे। और अभी भी गांव में वो दिखता है कि नहीं जाते हैं कुछ पब्लिक सेक्टर बैंक में, दूसरी बैंक्स में जाते हैं। कमिशन, people are giving commission also for savings, right? Why they are doing it? Many times people say मुझे DBT नहीं मिलेगा तो चलेगा, but मुझे लोन चाहिए और मुझे टाइम पे मिलता है। So I think it is all that, but at the same time, or the third, I mean, the most important part is कि फिर भी doorstep banking will require. Not that it is, because it is very important for a poor to get the service at their doorstep, because for them it is the reduction of cost also.
I'll just like to add a few things there to a question. So the other thing is that because I've been to some of the deepest rural branches in UP and other states, there what we have seen is that first of all, it's only a 1 or 2 man army. I mean, 2 people, driven bank. And plus, the branch manager is seconded from some other, state or some other location. Somebody from Maharashtra will be deployed, a very young boy or somebody like a branch manager, and there will be a cashier. That's about it, these 2 people. So, pehle to jo hum logon ne, you are right. And we, as Women's World Banking, because the name is Women's World Banking, we keep reiterating कि women क्यों नहीं है branch में आपके, एक किसी भी rural branch में एक women cashier क्यों नहीं दिख रही, कम से कम एक women तो हो। तो बोलते हैं कि कोई आने को रेडी नहीं है यहाँ पे, क्योंकि ये सब पोजीशंस बेसिकली बाहर से सेकंडेड होती हैं और बिल्कुल कम्युनिटी से नहीं होती है। एंड दैट इज व्हाई फॉर एग्जांपल दिस बीसी सखीज और वुमेन एजेंट्स कम इनटू प्ले वेयर दे select from the community. So this is one of the reason that, and you rightly said कि वो डरती हैं, and this was one of our hypothesis also when we started the work with public sector banks, because all our work is with public sector banks, and we saw that what women feel is कि इतना बड़ा बैंक है, मेरे छोटे डिपॉजिट के लिए या मेरे छोटी चीज के लिए मेरे को वेलकम थोड़ी करेगी, ठीक है, मैं ब्रांच मतलब सो उनके दिमाग में वो चीजें हैं कि there are these inhibitions are there that this bank is too big for me and it will not be, my small deposit will not be welcomed there. So therefore what we as Women's World Banking are trying to kind of tell them is, how to make a small savings welcoming. So even when they said, so when we started this program, which was Chandhan Plus, which said, आप 100 रुपए या 200 रुपए भी हर महीने जमा करेंगे अपने बैंक के खाते में, you will develop that savings habit. But then they said कि वो बड़ा बैंक क्यों लेगा हमारा 100 रुपए. So that is where BC came into picture, and then we say कि हम लोगों ने प्रोग्राम बनाया, आप जाइए BC के पास जाइए, ठीक है. BC में भी वो बोले कि मेल BC को हम लोग थोड़ा सा वो क्योंकि वो बहुत सीधी बात करता है कि आप कैसा पैसा डालो और लेके जाओ, मेरे को कुछ समझा नहीं रहा है मेरे अकाउंट में कितना है क्या नहीं है, और 4-5 क्वेश्चंस होते हैं मेरे पास. And that is where we are harping on the point that there should be a balance of women agents as well as male agents, or you should make these male agents more relationship oriented, more gender sensitized in terms of, explaining them, having some little more patience to kind of, make them understand the product. I think iska immediate solution to very difficult to, why women nahi hai, bahut hi difficult hai, but, hopefully in the near future, we'll get some answers.
So much. I'm already getting stares from the other side because of the timing of it. Somebody would you like to add anything to that?
No, just last one point, I think very, very relevant point. But if you look at this consumer base, more than the bank branches and ATMs is being served by the BC network. And the way I talked about the demand and supply gap between the consumers being there and the women BC network not being there, I leave that point to ponder on the BCNMs present in this room, that हमारी sales team में कितने लोग हैं जो female हैं, right? If we don't start thinking around that point today, it's very difficult to reach that percentage of 30, really train them, handhold them, nurture them. Also, I think start यहीं से करना पड़ेगा. The organizations will have to start. They will have to start investing and take very conscious calls. कि X percentage of my sales and distribution team on the ground has to be female. Then only you can create women BC agent. You can really be comfortable with them. So for example, at Spice Money, we are trying to create a separate women arm, which is now trying to lead all women initiatives for us at Spice Money.
Thank you so much. Thank you to all our panelists. I think this topic is so pertinent and the need of the hour that, this discussion could have gone for many more minutes. So thank you for all the insights, and we have a great takeaway. Do I give it over to you, Tanvi, on that?
Thank you, Poona, and thank you to all our panelists. And I'll request you all to remain on your seats, and I'll like to call upon Rahul Ranjan Sinha, Associate Director, Clients Insight for Impact, Grameen Foundation India, to felicitate our panelists and our moderator. Please give them a huge round of applause. There are some really important key takeaways from this discussion for all of us here. Please give them a huge round of applause. To a moderator as well. I'd like to, while the panelists are here and Rahul is here, I'd like to take this opportunity to release 2 reports documenting our learnings on gender mainstreaming in the ecosystem. These reports are being presented to you, the experts in the industry, for your review and feedback. The first report is on gender mainstreaming in business correspondent networks. Authored by Poorna, this report introduces the readers to the iCare framework developed by Grameen for gender mainstreaming within the BC networks. Please give them a huge round of applause. The report shares valuable insights for all organizations working in the financial inclusion space. Associated with this, we'll also be releasing another report on women-friendly micro-saving products. And for that, I would request the co-authors of the report, Bhakti and Rohit, to join us on stage. Again, this report focuses on the innovative products geared towards women and how they can help the unbanked population and those at the bottom of the pyramid. We have the co-authors joining us on stage right now. Please give them a huge round of applause. on women-friendly micro-saving products. Thank you so much. Thank you everyone for joining us here on stage. And thank you to all our panelists and our moderator for a very, very engaging discussion. And with that, ladies and gentlemen, we will now break for lunch. I know the aroma has filled the room completely. So the lunch is being served again in the left section of your room. And before you go, I'd also like to make an announcement. In the right-hand corner of this room is a photo booth. Please feel free to click pictures, upload them on social media. You can tag us at Grameen Foundation India on Twitter, Facebook, Instagram, and LinkedIn. Also, those who haven't had the chance to visit the Experience Center and the stalls, you can do so right now. And we'll see you back in some time. Good afternoon, everyone. Can we all please be seated? I'll request everyone to please come back to their seats. We'll start the second half of the day now. I'll request everyone to please come back to their seats so that we can resume with the next panel. All right then. Good afternoon, everyone. Welcome back to the second half of the day. I hope you've all enjoyed your lunch and more importantly, the conversations and discussions we've had so far. Up ahead, I'd like to invite our next panel on Digi-Include, Revolutionizing Financial Access, to deliberate on ways to empower the unbanked through digital innovation. The panel will be moderated by Amit Arora, Senior Rural Financial Advisor at World Bank Group. With over 25 years of experience, Amit is a commercial banker turned rural development banking specialist and has been associated with the World Bank Group since 2016. In the last 1 decade as a development banker, he's worked with the German Development Corporation, focusing on rural cooperatives, agricultural finance, and digital financial inclusion before starting his current role at World Bank Group. Amit, can we please have you on stage? Can we please give him a huge round of applause? Joining him on stage are our esteemed panelists, Mr. Sunil Kulkarni, CEO, Business Correspondent, Federation of India. Sir, can we please have you on stage? Sugan Saxena, CEO, FinTech Association for Consumer Empowerment. Anil Kumar Gupta, Partner, Microsafe Consulting. Please give them a huge round of applause. And Amrita Monga Kapoor, CEO and mentor at Swadhar FinAccess. With all our panelists on stage now, I would now like to hand over the mic to our moderator to take the discussion forward.
Thank you. Indeed. Post-lunch session. Are we ready for it? Okay. Sounds like a yes. Okay. Thanks. Thanks, Shashi. That's motivating. Okay. So the session we all know, digital financial inclusion in the hinterland. and very aptly worded, and fortunate to have great fellow panelists who are playing their role in enabling financial inclusion and more so digital financial inclusion. So I'll straight away move to Q&A. Since this is largely gathering of sectoral people, we don't have to introduce the subject. As India, we're all very proud that we made considerable stride in this space in a very short span of period. VC business itself is perhaps 15 years old, and we've seen how things have grown phenomenally in 10, 15 years across spectrum. There are new entities, new type of service provider licenses, and variety of new products also. So there are different segmentations here, and all the fellow panelists, it seems, represent one particular segment or aspect which gives us a lot of flavor. Whom should I start with? Face of the industry. I can't even say pun intended. Okay, so by the way, face is, or maybe you can elaborate on that, why I mentioned face for some people. Sugan, you represent the new breed of digital players in the financial service industries. And we've seen in last few years, there has been very positive changes and also some, I wouldn't say rocky start, but fairly volatile, movements. But it's good to have this in the initial period, so as to gain strength further. So since we're talking about digital financial inclusion, I have a straightforward, simple first question. Digital lending in the urban space, phenomenal growth. There are not as much challenges on the demand side also. And supply side data requirements are also sufficient to fulfill this. Purely from supply side penetration point of view, what will it take to move deeper into the hinterland, if I may simply put it like that?
Yeah, in fact, I was wondering that it's after a very long time I have heard this word hinterland. So I don't know, somehow in a lot of these conversation, it has also gone into, the word itself has gone into hinterland. So thank you, Amit, for this opportunity, and to Grameen Foundation to bringing this topic to the fore, because it's very easy to be, overwhelmed by the lights of the urban areas and what is happening. I think just as a, from the fintech lending perspective, for any industry, the journey starts with what you see in front of you, which is very easily available. So it is very natural for fintech players or fintech lending space to start with the very obvious market, which is huge to begin with. It's not a small market segment in urban areas, and there is huge untapped demand. While we say urban, is not that everybody is penetrated or banked there itself. There are huge pockets of under-penetration, underbanked population within urban area. And actually, if you ask a lot of these people who live in urban areas, they will tell you perhaps getting financial services is easier in rural areas because there is a collateral, there's a lot of rural banks available. For them, this migratory population which is coming to urban areas is much harder to get financial services. So in that sense, what fintech lending has done is in urban areas really look at this particular demand of customers, which was not served by any traditional player, be it banks, non-banks, and others, and small ticket loan, personal loans, whatever we call them, which are used by these people for various needs. So, data shows most of these customers take loan for emergency needs, to tap the opportunities which are coming for education and so on. And the velocity of life is so fast, right? People take a lot of decision when it comes to their economic life. They have a lot of demands on consumptions, and this is where the fintech is lending is, creating value for this customer. So I think it is very much rooted in what customer want and therefore fill this need. Coming back to Hinterland, I think the way I think fintech lending looks at is that geography is no barrier, right? These companies say that geography is history, right? So people, if they are data rich, if they have a smartphone and they can navigate the digital journey, it doesn't matter whether you are in places like Delhi or Mumbai or in wherever you are. So it doesn't matter. So fundamentally, the geography, as we call it, hinterland, it doesn't matter. There would be pockets of people, which is more important. So customer segmentation is more important than geography. And in that category, I think the socio-economic vibrancy within that community or the customer segment is more important. So what will it take? I think, as, I mean, we are only responding to the need which customer has. So if in the economy, so-called hinterland progresses and there is more economic activity happening, I think, they will be able to, add to the financial services. But having said that, I think from the supply side, they need much more understanding of the customer segment, which is not urban, perhaps which is not young or male. Most of the digital lending, if I look at, is 90% is still going to, male, very young people in city centers. So for that to happen, I think, much more different kind of products needs to be filled. And this is where you will see, once the market getting saturated in urban areas or there is increasing competition, it will be a very natural journey for them to go to other geographies. We are already seeing from tier 2 till tier 1 phenomena is moving to tier 3 and tier 4. And we would see more and more such things happening. So I would be very optimistic about the issue. I think, we are just in the beginning of journey. We should not try to fast forward it also, because there is a pace at which customer get ready for digital financial services. Suddenly, if you want that next day, they can start taking credit on app. It can be very risky also. And we discussed in the morning, unlike payments where, the risks are perhaps not as high, lending is a very different kind of business. It's essentially a risk business. And therefore, it's important that lending is contextualized in the life of a customer and creates great value. So I would think, it's okay that, as if now perhaps smaller rural areas are not so penetrated in terms of digital lending. Lot of learnings is still happening when it comes to digital lending in urban areas. There are trust issues, there are fraud issues, which we are all dealing with and will perhaps talk a little more about. But from where I see, I think, you will see more and more fintech lending also penetrating to geographies which you would not have even heard about it. And I mean, and in that sense, I think they're better placed than any other traditional players to be able to serve this need, because the cost of, reaching such customer base is much lower than traditional player.
Thanks, Sugan. You've actually given me fodder to ask other three panelists, so I can, actually dump my own questions and move to some questions that you hinted at. Amrita, Sugan mentioned about financial education journey.
Yes.
Very important to penetrate further. You play that role, very actively work with RBI on Center for Financial Literacy, especially women. Right?
Especially.
So, is financial education leading to conversion and adoption? Is that what the limitation is? And once they've understood, they're ready? Or is there still a fear factor which needs to be addressed? And it's not just education, but it's also practice and so on and so forth. The journey, that cycle you need to complete and give them the comfort. What will it take, again, similarly, in terms of digital financial literacy or even capability building, to give them that confidence they become customers? That's one part. An extension of this, there is a lot of which is getting generated. I'm sure you would also be generating a lot of information about the customer profiles and so on and so forth. Is this useful to create customer-centric solutions?
So thank you, Amit, for this wonderful question. Thank you, Grameen Foundation and BMGF for this opportunity. Very relevant questions, Amit, and I'll start with some data because all of us are so data driven, and especially for our digital financial literacy, including with Amit's question just now, along with DigiInclude. I'd like to highlight the RBI published the Financial Inclusion Index in 2021. It was 53.9, jumped up to 56.4 in 2022, a remarkable jump. If you look at the sub-indices, access, usage, and quality, access was high, riding high at 73%. And that is why in the G20 summit recently, in most of the sessions, there were many global leaders. India is being looked at as a world leader in the supply of financial services. With the 73% sub-indice of the Financial Inclusion Index. The other two sub-indices of access and quality are a little lower. Access is at 43%, and usage is at 43%, and access is at about 50%. These two represent the demand side. Now, the demand has to be accelerated to keep up with the supply, and to answer that question, it is through financial education, financial literacy, and the subsequent inclusion into the banking circuit, which will really increase the demand. And in the rural sectors that we work in, of the CFL project in partnership with the regulator, we are in very remote areas. It's the actual India hinterland in Bihar, in Jharkhand, in Madhya Pradesh. We are in a lot of aspirational districts. Over there, we see this digital revolution has not touched the rural poor, especially the women. Now, the financial literacy, how we address it at Swadhar is, and we do collect a lot of data on this. We collect data on the financial literacy levels of each village. That's the needs assessment that we do. We design our programs according to that needs assessment, earmarking the situation, the literacy level, income level of the village, and where we want to reach. Second, we design, conceptualize training modules as per the needs, again, of the villagers, with a special focus to the women, because we believe women in the village are the fulcrum who will really initiate that change and decision making. And then we include nudges and motivations in our training modules to encourage savings as well as credit, uptake of insurances. And from our previous programs, we have analyzed data, and the products that have been really used and taken up in the villages are the Pradhan Mantri Jeevan Jyoti Yojana, the Suraksha Bima Yojana, Sukanya Samriddhi, and the Atal Yojana Fund. These are the four top selling products, financial products in the villages, along with banking products of savings account, RD, and the fixed deposit. So how we go about conversion, which is very important, because that is the real outcome. I mean,
To stop? Carry on.
Okay, sure. So a pertinent question, how does financial literacy convert into the inclusion, which is very important, because we give the awareness, we educate the woman, we tell them how it is important to save, how savings can be compounded, responsible borrowing, give them knowledge on insurances and credit. But how do they really be included? That conversion takes some time, because there's a lot of biases, social biases, gender gaps, gender inequalities. That is the truth in the Indian villages. However, with certain nudges, and motivations, and giving them, data-driven examples of how women in other villages, who they can relate to, nearabouts in their state, have really progressed with this financial literacy and inclusion, and how the financial products have helped them in their life cycle needs, especially in emergencies, especially during the pandemic that we saw. Everyone who had the Pradhan Mantri Jeevan Jyoti Yojana, or the Suraksha Bima Yojana, which are the life insurance and the accidental insurance, were well taken care of. The conversion happened a lot during the pandemic because of the Pradhan Mantri Garib Kalyan Yojana, where DBT transfers occurred. So there was a lot of motivation to activate dormant Jan Dhan accounts to access the DBT transfers. So with real life examples, the conversion is easy. How we use data at Swadhar is, we collect data, we analyze it so that we can earmark processes that have worked, and replicate those in neo geographies, and also customize programs, adapt the programs as per needs of different states. So for example, in 2017, we were given the mandate to pilot the Center for Financial Literacy project with the RBI and Bihar in Darbhanga and Rohtas districts. In 1 year, this was successful. We got an extension to go into Jharkhand, Punti district, and Madhya Pradesh, Jhabua, Hinterland, very remote areas. But because we had some successful data on what trainings had worked, which trainers had been successful, what was the methodology that had worked, along with which were the popular top 4 to 5 products that were working, we replicated those, designed the programs, and then in 2020 of December, during the pandemic, Swadhar was chosen to set up 146 centers across different states in Bihar, Jharkhand, and MP. Within 9 months, we were successful because of data that we had, training modules that were available, nudges and motivations which would work along with the product. So it was very easy for us to replicate and convert financial literacy into the inclusion.
Great, thanks. Not very often we hear data being used to the advantage of the beneficiary or the customer. Usually it's a supply side phenomena. Data is used for supply side activities, business models, and so on and so forth. Sunil, moving over to you, you represent the BC industry. In my personal view, BC business has done more for India, at least Bharat, than perhaps UPI. Given the scale that banking services have penetrated in India in last 10 years or so, actually 15 years, but more pronounced in last 10 years. Number of agents have grown phenomenally in last 3-4 years. So that's a huge problem which has been solved. But very often, even today here, questions around sustainability of those agents. 90+% transactions are still either AEPS cash withdrawal or a remittance DMT, right? Which is still not generating enough revenue for the channel, and the question mark is still around the sustainability. In spite of this phenomenal scale that we have, what is to be done to ensure that last mile agent becomes sustainable?
Thanks, Amit. And thank you, Grameen Foundation, for inviting me. So, Sugandh and Amrita spoke about customer. Sugandh also spoke about digital lending for youth, which is predominantly what we call it consumption financing. Buy. Just keep buying. And that's where the financing is being related. So I will talk about customer, but I will more talk about link to the customer, which is the BCs. If I had to give you the analogy, you started in 95 with telecom mobile services with telecom towers, and telecom towers were the building block of mobile revolution. Capacity came later, and then the mobile-based app came later. Similarly, later on, the payments came where you had POS terminal, MPOS, and now UPI, where the merchant is the focal point and you are able to do transactions using that. Similarly, on financial inclusion side, the two things which really revolutionize, which you mentioned, the BC being causing the major access to financial inclusion is the Aadhaar, and followed by interoperability among banking. These are the two things which have really taken in the last 6-7 years, bringing 3 million BC agent points, doing almost 30,000 crore rupees worth of cash out, 450 million Jan-Dhan account with about 2 lakh crore balances, and from urban to rural, about 15,000 crore rupees worth of domestic money transfer. So the question you are asking is, yes, after this what? And the answer to that lies in what would drive long-term sustainable earning for a BC agent. And if we want to look at that, I see 3 items on that. One is, what is it that we are buying and selling, what we can buy and sell? And I'm again talking about the BC agent or merchant. What can we buy and sell? How do we get paid? And this is currently is 100% cash in case of BC because it's cash in, cash out. And third thing is, how do we get the money or capital to do the business, which is kind of working capital. And for each of these 3, we are looking at 3, again, disruptive innovation. One is called ONDC, which is Open Network for Digital Commerce, where every BC agent could potentially do buying, assisted buying and assisted selling. The second one is more relevant to digital lending, is the account aggregator, where we are talking about assisted account aggregator, where the BC agent will get to the customer assistance in getting the account aggregator application. And that customer could be an agent, and it could be a merchant, or it could be a pure customer also for consumption financing. And the third one, which is yet to be tested, and I'm personally quite bullish, is the CBDC for rural India, simply because CBDC in urban, while the pilots are on in about 4 or 8 cities with 9-10 banks, the cities have been plastered with 200 million QR code of UPI, and there is a UPI Lite also, which is doing offline transaction. And almost a $1.5 billion worth of promotion and cashback have been spent by Google Pay, Phone Pay, Paytm, Amazon Pay. And we have got 150, 200 million smartphone customers who are doing that. But CBDC has a much larger implication. Let's say in a village where there are only 5 shops. And those 5 shops, instead of giving AEPS cash out with 100% cash, you could do some amount of physical cash and some amount of CBDC cash. And those 5, and by the way, CBDC also has their QR code. There's a discussion going on whether we can have UPI QR code also adopted for CBDC, which will become much easier. But that QR code, this is very clear that CBDC replicate physical currency. It is not debiting a bank account when you are doing a transaction. When you are withdrawing currency, like you do on ATM, you are debiting a bank account. But once you have debited the bank account and got the currency in your mobile, it is like a normal currency, and you are able to send from one to another. It has the anonymity to the level the regulator wants, up to 50,000 rupees. So these are the 3 very, very innovative and equally disruptive innovation, which will fill up the basic demand at the customer level: buying, selling, working capital credit, and cash, which was AEPS. So between these 3, I would say each of these ones have tremendous potential to get additional revenue stream beyond AEPS, cash in, cash out, and DMT. Thank you.
Thanks. That's very useful. 3 points that you mentioned about. But Sunil, I have a follow-up question, and I've always been struggling to get an answer on this myself as well. You solved the payment problem, right? very likely the credit problem is also work in progress. Somehow, we've not found a business case for savings. Even if you go to the VC agent today, AEPS cash deposit is very unlikely, right? Banks for the segment that we are talking of are not innovating enough in terms of product development. What is the motivation for me to save in the common financial system, and what could be done for that?
Yeah, so I think it's a good question. It's a different answer for a customer and different answer for a merchant or trader. For customers, straight away, I think today, even for customer, not only consumption financing, Sugan talked about emergency financing. The emergency financing does require credit. So long as, and the account aggregator model now brings two things, account aggregator model and now the credit line on UPI. The credit line on UPI, one is that can you give small amount of credit for a short period, which required very different kind of costing from the banks, is now possible for even consumer. So it could be even a line of credit against fixed deposit. You don't need to do unsecured all the time. So you have secured, semi-secured, secured credit that can be given. Second thing is for the trader or for the merchant. Today you have, is there a, for example, the previous session where Chetna Sinha was talking about, I need money for every day. I need to save every day and I need money every day. Is there a product today, a 5,000 rupees OD product exists today? I mean, although we say that Jan Dhan Yojana has that 5,000, but it is not being popularized to the extent it is required where it is where it is required. So if 5,500 or 10,000 OD on a UPI rail, can there be a product possible? Once these are being popularized, then the impact is going to be multiple viral impact that, you know, if I want to do this, I better not deal with cash. And if you don't deal with cash, if your money is in the bank account, clearly that would give more confidence to the financial institution that we know that this much money is always there in the customer's bank account. Probably we can give them a UPI credit line or OD or any of those, depending upon whether they are customer or trader. So this is only a starting point right now because a lot of these products have just come. I think 1 year back, none of these three products that I talked about existed. And therefore, you are looking for at least 18 to 24 months time horizon where it will be popularized to get what we call as India is a credit-starved country, to bring the digital access and savings to bring payments.
I'll just extend the same question to you in a little different manner. You provide advisory services to a lot of players in the market, you know, who are providing financial services, but somehow we still have a paradoxical situation. PSU banks have done phenomenal work in financial two ways on that. However, it remains a social compulsion, right? And there is a cost attached to it. The larger universal banks have better businesses to focus on, better margins. And by the extension of the same logic, perhaps NBFCs, small finance banks gradually would also go in the same direction. Are we leveraging digital solutions, technology to create products for the bottom of pyramid segment, focusing on savings? Are supply side institutions interested in this? Has digital made it easier or it's still a pipe dream?
I think a lot of questions in one single question. Okay, so let me just rethink in this way. Why financial institutions are not able to do, or why they are not doing what they're supposed to do. So I think the first fundamental problem that we need to understand from the macroeconomic perspective is that, like I think you mentioned that India is a credit-starved country. Why it is credit-starved country? Can we really solve it? Answer is straight no. Reason is very simple. If everyone need money or loan, where is the money? Right? So entire banking system has access to money from the savers, from the pool of savers, and that they intermediate and basically lend it to people. So if the demand itself is more than what possibly supply can do, definitely there would be starvation. So that is something that we need to clearly understand. The second part is that whatever we have, say, for example, demand is $100, we have $50 in our kitty, only we can disburse $50, right? Let's assume there is no CRR, no SLR, anything. So if we were to disburse $50, we can cater to, let's assume everyone is same, we are doing $1 to 100 people. So we do only to $50 to 50 people. So remaining 50%, they will always remain out of. So what policies and the regulations have done is that to manage this imbalance, they force bank to do something. So it is kind of a priority sector lending, whether you call it mudra loan or any type of loan, but eventually it is asking banks to do something which otherwise they were not comfortable. And as Mamit, you rightly said, they have better business to do. So hence they would like to do that. Coming to saving part of it, right? Primarily because you raised that point. So saving, any bank would be interested. Say, there is a clear testimony in the sense like we shouldn't have any doubt that people are saving. Whether they are saving it in bank or not, that's a different subject, but they are also saving in banks. 487 million accounts, PMJDY accounts in India, nearly 150 crore total accounts in India, all types of accounts put together, more than 200,000 crores of deposit in PMJDY, more than 1,20,000 crore of deposit in bank is a testimony to it. But point is this, first, has it mopped up entire deposit? Answer is no. And reason is very simple. Say, for example, a bank offers a certain type of facility, whether in a digital environment or non-digital environment, they offer a certain reward by way of interest. There are always competing options available in the market. You say, for example, like just for a moment, let's forget about financial inclusion and the hinterland. If you look at any of you, and if you are talking to your personal financial manager, they will always advise you not to keep money with the bank, rather move it to stock or the property or the gold. So that is what is the concept of stock your allocation of your asset, right? So same thing applies in the lives of rural people also. So they are also allocating their capital to banks and to some informal systems and other places. Of course, banks can do definitely better. And one of the major point in that direction has been having BCs in every nook and corner. But what we see, like just to quote some numbers in the data, there is a limited trust on BC network. And when I'm saying so, there is a lot of data around it. Because if I go out in the market, particularly rural hinterland, not more than 20 to 30% of people, they ever transact with BC, though they are closer to their doorstep and it's very convenient, but still they don't go. They go to ATMs or the branches which are far off, for which there is a higher opportunity cost, and still people don't transact at BC. So there is a problem. So it means there is a problem. And if banks are willing to solve that problem, there is a high possibility that you can use a kind of a digital and physical model, because we always believe that if you are mopping up saving, probably fully digital will not work for this segment that we are talking about. So hence you need to build that trust on that last mile delivery so that people can come, walk up to them and pay up to them. So to me, actually that remains the crux, because a lot of thing has happened on the digital side. And there's another side to it. Say if you go out in the market, you want to lend, people will queue up. But the same person, if he goes out in the market, he says, I'm mopping up deposit for say some bank, or say some bank which is not a public sector bank or a new bank or new age fintech, I think no one will come. It's a equation has changed fundamentally. If they trust the entity, they are putting in the money. If they don't trust, they are very happy taking the loan. So that's one of the reason actually. That's one of the reason why what we see if you look at how people save in rural areas in long-term saving, a large amount of money goes into policies of LIC. One of the worst instrument is for saving. And a lot of people will vouch for it that it gives you 7%, 10%, 12% return. You confront them, show them the calculation, then they only go back. Otherwise, this is a normal thing.
So do I interpret that it's the supply side constraint? Of course, there are customers who are willing to put money in the common system and save, but we've not created products to suit their requirement. Perhaps because the margins are not there, or so and so forth.
Two things actually. One is, of course, to me, margins are there. Reason is very simple. Banks are working on high amount of CASA deposit and then net interest margin, basically, which is the difference between at what you lend versus what you get. So CASA, a large part of CASA is coming from rural areas. So this makes a perfect sense. But what is not making sense for people is that, how do I save? In the sense, whether this product or this offering is suitable for me. Right now, what is offered, two type of product fundamentally. One is savings account, second is a kind of deposit, which could be recurring or fixed deposit. What I want as a consumer, something, a purpose for which I want to save. There's nothing of that sort which is available. In fact, we have been trying to work with various ministries. 3 of our products, they said, okay, we want to test, we want to pilot. Banks, for the first time in my life, banks never said no. They said, yes, we want to test, but eventually they never tested, right? So unless you offer them something which is either similar to their lives or something that they are comfortable with, whether through touch points, building the trust or having a sort of convenience, they are not likely to save as much as they can.
Thanks. This is helpful. Food for thought. You mentioned about trust deficit. Sugan, I'll take this to you. You working for consumer empowerment in this space. So is the rural ecosystem ready for the digital onslaught? Or, is there good, we need to worry and prepare? What's your take? I mean, more in terms of, is there a recourse available, in the hinterland? Are there enough safeguards? These kind of things. Are we ready?
I think the straightforward answer would be no. But even we are not ready ourselves as somebody who is dealing in the financial services every day. As we move from so-called physical ecosystem to digital one, the sheer amount of fraud and phishing which is happening, it could be mind-boggling unless you really get to know. We work with digital lenders and we work very closely on the issue of fake lending apps. And in last 6 months alone, we would have, sorted something like 500 plus apps, which are misusing names of NBFCs, banks, and so on. The sheer velocity and the damage they can do in a very short span of time, we can't even imagine in the physical world. In physical world, somebody would go, start doing these kind of things. There is a time it takes, and often the damage would also be very narrow in the geographic space. But in digital, it could be very, very fast. And so that way, you are going to see much more frauds, cyber threats, cyber crime coming up. It's just the beginning of it, because now everything is digital. So I think as an ecosystem, we are still, sort of learning about these things. This whole issue of digital lending apps, which has got the highest attention, if you think about it, we still don't have a way to know which lending app is genuine. There's no whitelist, there's no blacklist. It's still 7 years now on. I think from the government perspective, cyber crime is something, which in last 3 years, a lot of effort has been done to ensure that you can report cyber fraud cases immediately to the police and, action is happening. But the sheer volumes are, I think, very, very high. And we are learning, right? New vectors of frauds are emerging so fast that for us it's always a catch-up game, right? So in that context, I do feel that, rural area, I think it's even more scary it could be, because, in urban areas, customers are still much more aware. They're also very vociferous and have confidence to, if nothing is happening, at least, so they would tag deputy governors, they would tag prime minister, everybody in the world to have their voices heard. In rural areas, not a customer can, just absorb this cost. And vectors could be very different, right? For us, it could be somebody who is, we got a message and we click on it and something happens. But in rural areas, there could be, BCs, they can say, okay, download this app and, something will happen, and this could be new vector. So the impact could be even worse. And certainly, I think as a, ecosystem level, we are not yet ready to solve for it. There's a lot of work which is underway, but as I said, such a new thing and fast moving thing, it will take a while for these things to emerge.
Thanks. The clock is ticking. Amrita, that shifts the focus to you. So a lot needs to be done in the hinterland to make the ecosystem ready, and your tribe is working on this. Given the digital solutions, technology is available, how can we scale this up in a cost-effective manner? At best today, FLC, Center for Financial Literacy, are at block headquarters.
Right.
So we have a long way. So long way to go, but I need a short answer.
Okay, sure, Amit. So again, very relevant, because centers for financial literacy, we are physical centers. Having said that, we have to scale rapidly. By 2024, the regulator wants a center for financial literacy in every district, covering 3 blocks each. And in each block, 50% of the villages have to be covered, along with 30% of the adult population. Having said that, digital financial literacy is extremely important. And we conceptualized a B2B model, which is providing online digital financial literacy to other NGOs, staff of other NGOs in various states of India, so that they can embed financial literacy in their communities. It's cost effective, it's rapid, it helps us to scale at a fast speed. Outreach is great. Besides that, we have 2 apps in Swadhar. One is a customer-facing app. It's called the Swadhar Sathi app. It is for self-paced learning. We upload training modules on this app, and our clients can engage in self-paced learning at their convenience. There are training modules for savings, for digital services, financial products that are available for responsible borrowing, and other new products that keep coming up as well. We are also innovating in this app more digital use of financial literacy and inclusion, so as to include even how our clients can connect to BCs near their villages, so as to accelerate the process of the final inclusion or the outcome. In order to upscale and increase outreach, we have another app, which is a trainers app called the Swadhar Dost app, where our trainers feed in client information along with their coordinates. Longitude and latitude helps us track where they are, so that we can, our trainers can move around and we can monitor exactly which audiences are being trained, how well the training is happening, because we also have a telecaller system, online dialer system, which helps follow up and feedback so as to monitor quality. So these are our, digital channels which we're using to rapidly scale.
Right. So one key solution is partnerships, B2B model for rapid.
Definitely.
Cascading.
Yes.
So we have less than a minute here. If I may ask few of you, rapid fire. Back to you again, Amrita. Is this segment willing to pay for financial literacy? Yes or no? Is it even fair to ask?
It's very unfair. We work in very remote areas. From our experience, we see there's problems of hunger and water.
So this is
So-
going to be public good plus philanthropy.
Public good,
or not?
absolutely. And it must be treated as a basic human right, financial literacy. So.
Okay. To you, ma'am, face. I forgot the question I wanted to ask. So this is a blank moment, but what I would like to ask you, do you see in the near future, we're going to have clear competition for JLG, SHG, KCC in the hinterland? And look at the city.
Yeah, I think as people move up, I hope so. And as they move up, they would like to have digital individual products which are most customized. So yes, answer is yes.
Any regulatory ask? DC has not riding on it.
SRO.
But for sustainability,
For sustainability, I think if these three products that I talked about is rationalized and DFS start pushing that, I think we will have capacity building on revenue.
thank you. On that note, Anil, I'll have to skip. I'm getting looks. So we need to end. Okay, fine. But we're done. Do we have time for any? Okay, so we can take two questions. I already see one hand. Please introduce yourself and pose your question.
My name is Vikram Yadav. I am from India Post Payment Bank. My question is for Sunil Kulkarni, sir. India Post Payment Bank have 1.5 lakh BCs in terms of Department of Post, and we have also individual BCs to the tune of around 50,000. So I want to ask, is there any mechanism like CIBIL or where we can check with PAN card or some other details about the antecedents of the BC, whether it is featuring in some negative list of other lenders, because and similarly for corporate BC, because I was reading somewhere there are around 400 corporate BCs, and India Post Payment Bank is now also expanding in corporate BC business along with individual BC. So with me already having 2 lakh BCs, and many other banks already have substantial amount of BCs. And when we go for further expansion to both individual BCs and to corporate BC, do we have something on the lines like IRDA side, we can go and check whether with PAN card, whether he's holding an agency of any other life insurance or health insurance. So,
Yeah, I think on the negative BC registry by PAN card, this is now available to every bank which is connected to NPCI. So this has been now made available to every bank. It is not made available to BCs, but it is made available to banks. So since you are a bank, you can get that. Fraud is one area where everybody is now focusing. There are more and more. There is a special steering committee within NPCI to manage fraud, and I'm also participating there. So not only the PAN card, but also fraud as a whole is being worked upon with the highest intensity, simply because what Jasugan mentioned, she's talking about remote transaction. Here we are talking about proximity transaction. There is a face-to-face transaction, and even if there is a fraud happening, that's even more serious. So yes, that is what you are asking is available. Corporate BC as a fraud company is even easier to detect, because if somebody has done any fraud, the banks first delist them and they don't work with them. But I think the major problem is not corporate BC, it is with the BC agent.
where do I check as a bank for corporate BCs which are approaching me?
So there is no such registry, but since there are just, if I tell you 400 is the number at IBA, but actual number of corporate BC which are accounting for 95% of total 3 million population is less than 40-50. All of them are member of BCFI. So you could approach me also to find out the so-called naughty BCs who you don't want to onboard.
Next question, not a naughty one.
So, Anil sir, as you mentioned, that going completely digitalized in the rural sector is not a feasible idea. But I think before doing something, it's always an idea that it is not feasible or not possible for us to do on the hinterland level. For example, when we see always the buying and selling of cattle has been done in an offline setup. But now we have a startup that is Animal, which has made it feasible for the rural population to do this, buying and selling of cattle online. And one of the sole reasons for the success of that, the interface is such that the interface does not make the rural people, the farmers adapt to the interface. It's something that has been made adapting to the requirements of the people. So my question is that when we are talking about financial access in the hinterland, why aren't we focusing on products that will make people, access to this basic financial facilities on their own? Why can't we have like a simple setup that could be attached to the devices so that they get the access to the financial stuff by basic things such as the thumb stamp itself. So, and also the products that we are trying to come up is for the BCs. So my question is that why do we want to make BC agents a third party for a thing as basic as financial literacy or cash in or cash out transactions? Why can't we have an interface for the people that is very, very accessible, and the BC agent, they can act as like if some issue occurs, the people can come up for assessment or for accessibility issues. I mean, sir, I do not get the idea behind making very basic facilities, very basic amenities, for the people to be dependent on some other third parties, that is the BCs, rather than making them empowered in this domain. We are making them dependable on the BCs for things such as e-commerce as well. The products that we have been coming up, I think, sir, we should do something that makes them empowered rather than them to be completely dependent on a third party.
Sunil, you'd like to take that?
Yeah. So I think the answer is very simple. India is a country where people want help. You've seen that. I mean, maybe you are very young. There was an ad of a washing machine by Videocon, and they said that with that, the ad was saying bye bye Kantabai, which means now you don't need a maid with that washing machine. Guess what happened? Kantabai is still there. She is now using the washing machine, right? So basically, what it means is that, and I gave the example, $1.5 billion of cashback, self-service, UPI, we have 150 to 200 million customers. People still don't want to do things themselves unless it is being incentivized upon. The BC has been made a model because if you look at bank branches and ATM, they are very expensive. A typical urban bank branch costs 2 crore. A ATM costs anywhere between 2 to 2.5 lakh. The BC currently is completely variable cost. We are talking about women BC with a fixed fee, but all other BC is completely variable cost. They are able to help. They are actually, so I will not use the word Kantabai, but they are actually helping the financially excluded customer to do things which are required, as simple as cash in, cash out, but they can do all other things, eKYC, insurance, mutual fund, etc. All those things are done, but that is not being made popular. So that is a link which is pretty much required to make sure that people who do want help and who may not be able to do themselves the transaction, they are able to be made available.
Can I add 1 minute? Huh? So see, to me, this is a process. Actually, this is a process. I don't know, like if you are watching very carefully, if you are at airport, just till 3 years back or even till yesterday, there is always a person who helps you taking your boarding pass out, right? Till few months back, it was happening in such a fashion. Whenever I was trying to do on my own, I was not able to get the printout, but this guy will get me, right? Right now, I don't do it because they don't need printout. It's available now. It's a process. I have seen evolution of ATMs in India. I have seen offline to offline online to online type of version. So it's a process. And only thing for some, it may be a little longer because what's happening is that the way we have seen the life or the way we are educated, probably most of us are fairly digitally literate. But if you go to the hinterlands, people are, even if they are literate, they are not digitally literate or they do not trust those things. So they trust people. So whenever they trust people, they will go to that person, they want to talk, they want to see, and then they will let that transaction happen through that counter, even if it means it's a costly option for them.
Thank you.
Just two lines, because a young person is asking this question. I'd just like to tell you, in very deep, remote rural areas of India, there is a huge trust issue, as Anil just said, huge trust issue. There are very low levels of literacy. And homes are very far apart, people are very far apart, they're not heavily populated. Now, we describe it as humanizing digital financial access. It's extremely important, the trust building. So we have to, a human, a trainer or a VC has to inculcate that trust, build that human connect, and then encourage digital financial access.
In fact, the BCs are also known as human ATMs.
Right, absolutely.
That note, we'll finish this session. It has been a very useful session. I'm sure audience also enjoyed it. Thank you, panelists.
Absolutely concur with that. Thank you so much to all the panelists for such an engaging session. And thank you to our moderator for steering the discussion in such a beautiful manner. And thank you to our audience for these phenomenal questions. I'd like to request Arindam Dasgupta, Project Director, Grameen Foundation, India, to please felicitate our panelists and the moderator as a token of our gratitude. Ladies and gentlemen, can we have a huge round of applause for our panelists? Come on, we can do better than that with our applause. Yes. I'd request all the panelists and them to please stay on stage. Yes. First report is on exploring the effectiveness of low-cost marketing, authored by Ganita Dhaya and Ritika Chaudhary. I'll request Ganita to please come up on stage for the release of the report. Can we have the report on stage, please?
Hi, Ritika, I miss you. I know you're watching from home.
This report highlights the impact and key learnings from low-cost marketing initiatives conducted by Grameen Foundation India, which includes common color branding and WhatsApp video marketing. Ladies and gentlemen, we are releasing the report on exploring the effectiveness of low-cost marketing in the BC network. And just a minute. And we are also releasing another report on assisted e-commerce in ONDC, which has been co-authored by Piyush Singh, Bhakti Palande, and Dhwani Sharma. Can we have the authors on stage, please? Can we take the Bhakti, please on stage. This report highlights the need for increasing and diversifying the revenue of BC agents in India. Yes. Please give them a huge round of applause once again. Thank you so much to all our authors, panelists, and the moderator. Thank you so much for this. So the 4 reports that we've released today, we invite you all to please give us your feedback and your inputs on these reports. You can contact the authors of these reports. You can contact anyone from Grameen Foundation India, so that we can make these learnings more holistic and socialize them in the sector. Okay, we have a very exciting chat coming up next, but before that, we'll break for about 5-10 minutes. Oh, okay, I've been told only 5 minutes. So I think I'll not move from here. I'll keep a tab on the clock, but you all can take a 5 minutes break. And while you're at it, please do go experience the experience zone and the stalls that our businesses have put up. They have some beautiful products on display.
If you is this now? If you want hard copies of these reports, they are at the back. If you want soft copies, you can scan any of the QR codes on the digital standees. In your kits, there are also bookmarks. So you can scan the QR codes on those bookmarks to get a copy of the report. All right, we can all settle down. We are starting a very exciting fireside chat in another 1 minute. Tanvi, over to you.
Okay, let's settle down, everyone. Please come back to your seats. I'll request everyone to please come in the front, take a seat. We'll start with the next chat shortly. So please come back to your seats. Organizers, can you assist everyone to their seats, please? All right, then we'll resume now. Up next is an exciting fireside chat titled Include 360, a comprehensive approach to financial health, to discuss the scope of traditional micro-lending in a fast-changing landscape. I'd like to invite our eminent speakers on stage. Our first speaker is Gigi Mamin, Executive Director and CEO, Sadhan, former CEO, Mudra Limited, former CGM NABARD, and former Managing Director at Napfins Limited. It's an honor to have you on stage here, sir. Can we have a huge round of applause? And chatting with him is Mr. Pratim Bose, senior journalist, commentator, researcher, and consultant. Over to you, sir. I can assure you that this is a chat that you don't want to miss. So I'll request everyone to please take your seats. And sir, I hand over the mic to you to take us through this extremely pertinent topic. Thank you.
Good afternoon, ladies and gentlemen. I think with his vast experience in almost all sides of government's initiatives in financial, rural financing, development financing, and now in the industry. And Mudra, that is the last thing that you took up for the government, has been hugely successful. So I'm sure it would be a 360-degree view. Sir, I'm sure this must be, the end part must be the most exciting part of your journey into this world. We have seen microfinance and microcredit as it was projected as the tool for financial inclusion. And from a parallel topic, it became a mainstream, it became mainstream of in banking sector, which has been epitomized by the rise of Bandhan Bank. From there, suddenly, it took a different trajectory. So much so that in terms of financial inclusion ratings, today India is above Italy, Spain, and probably just a notch above South Korea. And we know the ground realities like the banking account penetration and all these things. So I'm sure, how do you look at this whole journey, and what would be the journey kind of in next 5 years or so? What is waiting for us?
Thank you, Pradimda. Good afternoon to all of you. And let me first of all thank the organizers for bringing me here, and that to have a chat with eminent journalists like Pradimda. So it's really, I feel it's my privilege, and I'm feeling honored to be here on this stage in this discussion with Pradimda. Yeah, financial inclusion, you rightly said that we have, over a period of time, we have covered a long distance. But if you see, let me just go back a bit. If you see from the beginning, there has been some effort to bring financial inclusion or bring poor people under the banking fold. If I say, even in 1912, when the Cooperative Societies Act was enacted, that was also an effort towards bringing people to the financial inclusion fold only. Subsequently, after the independence, we found that nationalization of banks happening. We found that regional rural banks being created. We found that SHG bank linkage program, which came up in 92. I would definitely rate SHG bank linkage program, which is a microfinance initiative which started in the country, one of the major and massive program towards financial inclusion. It was basically to bring the women, especially the poor women, who was otherwise not able to reach the bank or get the banking facilities. They were brought together in a group. In a group mechanism, they were taken to the banking fold. And we have seen how SHG bank linkage program has it has unfolded in the last 30 years or so. It has completed 3 decades now. Almost 14 crore households or 14 crore families or the women are part of this SHG movement. Taking cue from the SHG bank linkage program, probably the microfinance institutions came in a different mode through the JLG, Joint Liability Group Financing mode. And we have seen how from 2000 onwards, how the JLG movement has panned out. And in last 23 years, how much difference it has made. So in financial inclusion, I would say that there has been, and of course, subsequent to that, the real financial inclusion as a program, whether Reserve Bank of India or Government of India, which took it as a program in the term financial inclusion, started in 2005. When Reserve Bank of India in a monetary policy, they for the first time talked about talking about financial inclusion, having bank branches and having bank accounts for the people. So then thereafter this then came all these changes we have taken place. So over a period of last 30, 40 years, I would say that the country has really progressed as far as financial inclusion is concerned. And in the last 5-10 years, it has really taken a leap. And in the last 6-7 years, I would say, especially after the PMJDY, the initiative of the government, which came with the form of account opening, or in the form of the digital movement which came on. These are all part of this journey, and I find that India has really gone leaps and bounds, and we are in a position where we can take pride, especially the payment system which we are having, the UPI system, or the JAM Trinity on which we have our entire ecosystem is being structured. They're all something which are really an example to the entire world, and we are really reached a level where we can really take proud of her. So I feel, yes, we have done extremely well as far as the financial inclusion aspect is concerned in the last few years.
Oh. So just a quick take on the road ahead. I mean, a tectonic shift should, if that was a tectonic shift, then it should be followed by the next level of revolution.
Yeah.
And knowing digital, which is a very fast changing world. So what kind of changes that you expect? Just quickly, a quick bit of it.
See, digital is definitely, it has changed the whole, it's a real game changer for the entire process. Today, sitting anywhere, you can transact with any bank, you can transact e-commerce, you can start buying things, you can book your tickets, you can do anything you want. So the space, the distance, everything has become a thing of past. So this has really enabled the faster growth of the financial inclusion. And that is what we had been seeing in the previous session also, when they are discussing about the BC model. In fact, the BCs across the country, because of the technology, they are in a position to contact the last person and bring them to the mainstream banking through the technology. So technology has played the major role in this.
One interesting aspect is people think only the technology has progressed.
Yeah.
It is not merely a case of bank account penetration. There are many more important changes that has taken place in the economy. To give you certain examples, the below poverty line, the poverty ratio was 55% in 2005 and 6. It is now down to anywhere between 0.8% to 10% as per different estimates by the international agencies. So that's a major shift. If you take the whole macroeconomic scenario in consideration, then India is right at the cusp of moving to the next income level. And that is exactly where the government is coming in and projecting. With these changes on, we see that Mudra, now I saw the recent report that they are aiming to increase the ticket size. The point is that this is a changed country than what it was in 1991 when the economy was liberalized. And that should, ideally, that should reflect in its loan appetite, in its financial transactions. What is your experience?
Are you talking about the loan segments in the Mudra?
Yeah. When we started looking at microfinance, it was more like giving people extending a hand kind of situation. Today, it is these are our needs are different. It is about growth.
Yeah.
So ideally, his requirement for finance, his expectation, all should be different from what it was.
See, there is if you see the country, we are such a large country with such a large population. And even today, around 70% of our people are in the rural area. And they are all, we can't say that they are reached a level, they can go into a next level of their, what do you call it, the living style. So there are a large number of people still who are not been, they have been brought to the banking fold, that's true. But their credit needs, have they been taken care of? So that is the reason why you have different segmentations. Microfinance is still relevant in the country. Microfinance, when you say microfinance is something which is, as per the recent RBI regulation, anybody who is having a income level of 3 lakh per month, per year, 3 lakh per year, is considered as a microfinance borrower, is an eligible borrower. So any household with a income level of 3 lakh can be treated as a microfinance borrower. And this itself is quite a large number still. So that microfinance will have to continue for some more time. But yes, that graduation has to take place. Because we have seen in case of microfinance, there are several people who have reached a level where they can move into the next level of their business. So that graduation of being from the group to an individual entrepreneurs That has to happen. If you talked about Mudra, in fact, let me tell you, Mudra, of course, I had the opportunity to be the first CEO of Mudra. So where we have three segments of loans, basically Shishu, Kishore, and Tarun. The name itself says Shishu means it's child. Kishore is a teenager or a balak or something like that, and Tarun is a grown-up person, a young man, an adult person. So this is what exactly the government also thought at the time of formation of Mudra. There has to be a graduation from a Shishu to Kishore to Tarun. That means somebody who is starting as a small business, a micro business, a nano business, has to move up from a 50,000 loan to the next level of 5 lakh loan, and to the next level of 10 lakh loan, and maybe to a further upwards. So that graduation process has to take place, and that is very much important, and that is what we have to aim at. Now, one of our focus as Sadhan, let me tell you, one of our focus is that we have been telling the members that we should try to bring the right kind of individual entrepreneurs out of the groups and try to develop into individual entrepreneurs of sizable business so that they can grow. And they can grow and they can become, they can increase their business level, the income level, as well as they can also start providing employment to others. So that graduation definitely would take place. But I still feel there is a room for the Shishu category of people, loans, and even to the lower to that. Let me tell you, there are a sizable population in the country who has been still not touched by the microfinance institutions also. We call them ultra poor, who are not been able to come to even to the microfinance level because they are basically hand-to-mouth subsistence they don't have. So in such a situation, probably bringing the microfinance, ultra poor to a microfinance level, that itself is quite a challenging task for all of us. So that segmentation of loans and segmentation of category of the business would continue, and that has to continue, and it will continue for some more.
So you don't expect any redefinition of microfinance is necessary at this moment?
Pardon?
Any redefinition of microfinance is necessary at this moment? Like, as you said, the 33 lakh family income cap or etc.
See, microfinance is basically what? It's only a categorization for a set of people who are having a loan income level of 3 lakh and above. But nobody says that 3 lakh and above should not be financed. So there has to, if you see in the new regulation also, there is a larger window for the non-qualified assets, that is non-microfinance loans. They have made it 25% can be in the form of non-qualified assets. So that much leverage is there as far as the microfinance institutions are concerned for providing loans beyond 3 lakh. So they should be looking at the individual borrowers who can be graduated to a higher level, beyond the 3 lakh level borrowers. They should be seen as a separate category and they should be looking at financing them. So I'm sure at the moment, in fact, this is a point which we have been discussing with the Reserve Bank also, because at the moment, if you see the rejection rates, there are a large number of rejection takes place because their income level is going beyond 3 lakh. So we were saying that probably there should be a decision of increasing that level. But then Reserve Bank also said that probably this itself is still a huge number of huge number of people are still in this category. So let's take their interest first. And also those who are growing up, they can be considered separately. They can be financed under the non-qualified assets category, or as a bank can pick them up and start financing them. So that's the way it should go.
The next thing is, of course, digital. There are a lot of concerns, but fact remains that digital is a process that you cannot reverse. This is an irreversible process.
Yes.
There are now, the smartphone penetration was supposed to reach 96% in 2040, as per some projection some 5 or 6 years ago. And I saw the other day that it has reached 85%. Now, what it means is, forget about percentage point, all the gender gap issues in smartphone ownership and etc. are going to be erased in no time, and people will have smartphones.
Very right.
That being the case, and we are seeing an interesting reflection in numbers.
Yes.
I was just checking Paytm's numbers in December quarter.
Yeah.
And if you take in December quarter, their total disbursement was 10,000 crores. The disbursement in December alone was 3,600 crores. And these are 4 times year on year. I mean, the numbers are very unsettling for me, to be very honest. There are issues with digital lending, like predatory lending can happen. There can be issues of, as the earlier previous panel was discussing about these fake apps and all these issues are there. But having said that, there is little doubt that this is a disruptive change that has happened in the industry. Now, does that or shouldn't that mean the end of the SHG model, beginning of the end of the SHG model in microfinance? And whether this, what is your expectation from the regulator? Is at this, regulator, don't you think that the regulator should be a little more fast forward in fast paced in its policy making? And finally, what would be the role for the traditional microfinance, microcredit lenders? Are we going to see a consolidation in the sector, which we saw in many other sectors post liberalization?
I think, let me just, you have covered 2-3 areas. So first, let me say how digital is going to compete with the group mode. That was one of your questions, how SHG will become relevant or JLG will become relevant. How see, I still feel digital is, of course, it's an enabler, no doubt about it. It is going to enhance the penetration much more faster way. There is no doubt about it. Already we have been seeing one of the, I would say that microfinance institutions are one of the early adopters or one of the quick adopters of technology. In 2015, that was the first time then microfinance institution, many of the microfinance, I won't say all the microfinance, the bigger ones especially, they started onboarding the people, onboarding the borrowers directly in the field through the devices, handheld devices. It could be a tab or it could be a mobile, those kind of things. So it started in 2015. So now most of the MFIs, especially the bigger ones, NPOC MFIs, are doing the sourcing through the devices, handheld devices. It could be a mobile or it could be a tab or whatever it is. Many are doing the processing online. Disbursement was almost 100% disbursements are happening digitally, online. So especially with this Jan Dhan account being having reached a level where almost every borrower has an account now. So disbursement through the digital mode is now an easy way. So that has been happened, especially with the demonetization. That is something which that was some I would say benefit which accrued out of way, although it was not intended for. But one of the thing which one of the benefit which accrued out of that demonetization is that digital transaction enhancement in that.
Probably that was advanced. And probably that was advanced by COVID once again.
Exactly. See, I would say in every challenge or every challenge which this industry was facing, they have taken it as an opportunity to innovate in one way or other. So when demonetization took place, the payment of transfer of fund was difficult through the physical mode, which was hitherto done by the microfinance institution. So they moved into the digital mode of payment. So now almost 100% digital payment is happening. Now even documentation takes place digitally. And now collection. Collection is one area which is not that picked up very high, but still it is happening to a higher level in the sense the actual digital payment through UPI mode or through the UPI mode takes place around 10 to 12% in the industry. But if you see the payment transfer of funds through the CSPs, that is like your Spice Money and those kind of the agencies, it is as high as 30%. So that is also happening. So digital has really, the technology has really enabled the the whole process in the microfinance system. But I would definitely feel that it is not going to take away the entire process of microfinance lending, because it's a high touch activity. Unless you have a high touch point, unless you have a connect with the people, this lending will become something like any other lending. Why you are having 98% recovery or 99% recovery, 100% recovery? Basically because of the field connect you have. The moment you remove that connect, it will also become like lending through any other system. So that is why I feel this fintech you talked about, the lending through fintech may not become a challenge to the JLGs, because one thing is that I don't think fintech has the reach of the microfinance institution to connect with the people and ensure that the recovery takes place, I mean, in a 100% way or 98% way, the way it is happening. That is number one. Number two is that the kind of trust which the earlier panel also talked about, the trust factor. See, so the people who we are talking about in the microfinance sector, the bottom of the pyramid, the segment which we are talking about, they're still not comfortable. They're not confident. They're not having the capability. They don't have the kind of devices for that. They don't have the kind of comfort doing these things. So the SHG, JLG lending mode will definitely continue, but they can be supported with the digital process so that it becomes much more efficient, much more quicker, much more easier for the transactions. So this is going to happen. This will continue for some more time. At least I see another 5-10 years, this is going to happen.
Okay. Now, you see, I understand your touch point. That is what is the MFI industry most sells most, that high touch point. But why high touch point? This is because of the credit rating. Even your foot soldiers are the best. They ensure the creditworthiness of a person. Now, given the digital framework, the moment someone is transacting, the local pawn shop, the small kiranawala and the fruit seller, everyone is transacting through UPI. So clearly that is creating his credit worthiness.
Right.
Okay. So the credit worthiness issue will soon be tackled by technology.
Yeah.
On top of that, technology is eliminating that huge delivery cost of loan. So, and we are seeing the app-based loans are distinctly cheaper, 7-8% cheaper. Now access to credit is also includes the cost of credit. So finally, for the traditional segment, what I understand is that the traditional segment, they have to reduce costs to compete with this segment. How should that happen?
I would agree with you. Fintech would be in a much better position to provide a much cheaper loan than a MFI. Even today, if you see, we have different lenders in the ecosystem. You have banks, you have NBFCs, you have NBFC MFIs, those kind of things, or fintechs. Different segments has got different rate of interest. Banks are the cheapest. They can, if you can get a loan from the bank, you can get it maybe around 8 to 10% or 12%. NBFCs may charge up to 15%. But MFIs which charges around 24 or 25%, they also existing into the ecosystem. So I feel taking into the size of the size of the country and the size of the population and the size of the economy, there is space for everyone. Of course, this fintech also will continue to be there, and the MFI also will be continuing to be there. Banks also will continue to do their business. NBFC also will continue to do business. I'm sure all this can coexist better. But what I feel is that fintech cannot become a competitor to the MFIs, mainly because of the kind of the services which MFI is providing. Basically, because of the physical touch they have, because of the kind of the human transactions they do directly, that makes much more comfortable for the people. We heard in the previous session people talking about that, the trust which they develop, the comfort which they develop. So these are things which is going to continue, and I don't think. But I will definitely say that it is cheaper. Fintechs could be cheaper, but they can't become, they can't displace MFIs. They may take away some business, but they will not displace MFI.
Right. No, my idea is, I understand that, there will be space for everyone.
Yes.
But the question is, who will take the main stage? That is the basic idea. Now, the whole MFI industry is aimed at giving loans. And the financial inclusion has a wider, landscape. The market participation, equity market participation in this country is 5%. It was 3% 30 years ago. Mutual fund participation is 12 to 14%. This access to government schemes, that itself is there are some, I was reading somewhere there was 100 or 200 different schemes of government, state, central, put together. People don't know about its existence.
Agreed.
So there are many products which can be sold out. These things are, don't you think that MFIs had the foot soldier model that had more relevance in terms of selling products, different products, than giving loans? Because if the app makes the loan available, I mean, you and me, whosoever it is, will finally take it.
I fully agree with you. I fully agree with you. The MFI has to move to the next level of the activity, which includes not just giving loan and collecting loan, which, as you rightly said, even a fintech or even anybody else may do it. But they have to, in fact, if you see, after the COVID is, COVID has subsided, the group mechanism, group dynamics has not come back to the original shape. Because people, see, if we are going to the groups only for the purpose of collection, I can always send the money through somebody else or through the digital mode or whatever way, I can pay the money if that is the only occasion. But originally, if you see, and which I still feel SHGs are still able to do that, they bring some kind of a credit, finance plus activities in the groups. They do a lot of empowerment activities in the group. They have some social activities. They do some kind of learning by being in the part of the group. So those things have to be there. Even MFI will have to, of course, many of them must be doing that. Some of them must be definitely doing that. But they have to make this group much more interesting. And it should be beyond the giving and taking of money. That is what. And earlier also you asked what should be the next stage of financial inclusion. In fact, financial inclusion, when we talk about, we normally talk about the bank account opens only. Bank accounts only. We talk in terms of bank account only. But whereas all those products which you talked about, whether the insurance, whether it's pension, whether it is the other kind of remittance facility or a payment system, it's all far below the level which was expected.
And these are expanding markets.
So that's all. So naturally, you have to move into the next level of services which can provide all these services. So some of the MFIs are already doing. They do some kind of they be part of the insurance and they do some kind of a cross-selling of insurance product. Otherwise also they do a credit link the insurance for all the borrowers. But other than that, they also do some hospicash insurance. Some people also do some general insurance products also. But then it has to become much more larger way. I do agree that the group, if SHGs and JLGs have to continue, just lending and taking money is not the only thing. They need to go much beyond that and make the group meeting much more interesting and make it attractive to the members to come and be part of it. Then only it can go forward.
Sir, having served having worked as a journalist, economic journalist for 3 decades, I have a perverse view to the world. This is, I measure the potential in an industry from the level of merger and acquisition activities. Okay. And so the death of a few do really excite me. Now, the question is, in this sector, we are yet to see many deaths. We are yet to see many merger and acquisitions. It is still, like stable. And that stability is always very unnerving to me. I keep thinking that a storm will be coming. So, say, for example, MFIs have access to consumer data, actually. And right at this moment, it is that data which is the most priceless data.
Yeah.
But why we are not seeing that? I mean, or is it the moment when that should start? A lot of integration, maybe tech company buying an MFI buying a tech company kind of situation.
See, for your information, there are deaths happened in the industry. It's not that it's not at all happened in the last, if you see the last 2-3 years, at least 3 MFIs have gone down the drains. There are some 5-6 acquisitions and taking over has taken place, including recent one is one. Sonata has been taken over by Kotak Mahindra Bank. Before that, BFIL, that is that old SKS, that was taken over by IndusInd Bank. Then there was another company called BSS in Mysore area, which has been taken over by Kotak again. Then so most of the private sector banks have acquired one MFI or other. That is number one. Mergers have taken place. Like I know Madura Microfinance has been taken over by the Grameen Kuta. They have taken that. There are Northern Akas and taken over. There is a MFI called Smile in Chennai. There is another one that Ashirwad Microfinance. They have been taken over by the. So there are so many that is happening. It is not that it is not happening. And at the same time, we are also seeing some new MFIs coming up also. And in fact, that should be the process. I would feel that the whole moment of this institution should be in such a way that it should be, I would say, there has to be graduation within that also. Like your MFI is becoming SFBs, SFB is becoming a universal bank. Or when before they become an MFI, they must have been only an NGO. In fact, if you see the Bandhan itself, Bandhan journey itself, if you see, it started as an NGO, became as an NGO MFI, then became an NBFC MFI, then became a universal bank. So that kind of a journey will continue. At the same time, we should also have more and more number of newer MFIs coming up in different parts of the country. For your information, let me also make a point that even today, when we are talking about the the microfinance institutions penetration, the penetration is concentrated in a limited area. About 82% of your microfinance portfolio is still held in 10 states. 56% is in 5 states. Top 5 states have 56% of the portfolio. About top 100 districts will have almost 80-85% of the portfolio. So there is a large area which is still not covered. That's why I said there is a huge scope for microfinance to still exist and to grow. Only thing is that you have to find the right kind of place and right kind of space to move around. So yes, it is happening. As your question, I'm saying that there are deaths happening. There are 2-3 deaths have happened recently, which I know. Earlier also, when Andhra crisis took place, there are a few went down the drain. So it happens, and taking over also is taking place. That is a continuous thing, and that will continue, and it has to continue also.
With that, thank you so much. Thanks, Mr. Maman. I hope we could keep you awake in this hour. That would be our greatest achievement. Thanks.
Thank you. It was nice talking to you, Pradunda. Thank you.
Thank you so much. Some really important lessons and insights to be noted from that discussion. I'd like to request Aravda Das, the Director, Program Excellence, Grameen Foundation India, to kindly felicitate the speakers. I think the discussion beautifully encapsulates a conversation that we have today and every day, that India has to take pride in its journey of financial inclusion so far and strive to propel its journey further and farther. Thank you so much. Please give them a huge round of applause. Thank you so much.
Thanks, sir.
As we draw closer to the end of this conference, I'd like to invite on stage Piyush Singh, Director, Innovations and Digital Finance, Grameen Foundation India, to deliver the closing address.
Ladies and gentlemen, thank you so much for attending the event, gracing us with your presence. We had a great lineup of discussion, and I'm sure that you would have enjoyed a lot. I met few of the participants who said that I came here to deliver some of the sessions, but they said that I have learned a lot, which I will go and implement back. That is one of the biggest achievement that probably we can have as an organizer, as a host. Thank you so much for that. And thank you to those people as well who are attending us online. Hello. So thank you so much for being a wonderful audience. Some of the things that we discussed about was that we have already achieved financial inclusion to much extent. What beyond that? We have money into the bank account. What about the financial health? Are they using it? Why are not they using, for example, stock market, mutual fund? We always talk about mutual fund sahi hai, but mutual fund क्यों sahi hai? वो कौन बताएगा? Why are we not talking about stock markets in the financial literacy camp as we are doing about the Jan Dhan Yojana? We are talking about NPS. Why are we not talking about the stock markets? Why stock markets are still being kind of, say, servant to the YouTube influencers? I was reading a report, and mutual funds are being sold, or I would say influenced largely by the YouTube influencers, right? I don't want to take names, but it is also a regulated product. And as Mr. Anil Kaur Gupta was talking about, that the money is moving, right? Because the interest rate is going down. You talk about all of the different digital currencies. Now those does not earn interest, which means that are we moving to a zero interest economy? That is also one of the questions that you need to ask. And if that is happening, people will then move, say, money from bank to an alternate investments, right? So we have to think about that as well, that if that is a changing situation, are we also changing our perspective, or are we just sitting with the same perspective that the banking, as someone said, that not banks, banking is important. So are we talking about that? Are we thinking about that, or building on top of that? Also, I would say that we also talked about data. Everybody says that data is the new oil. I say data is a soil. You are using someone else's soil, you have to be careful. You have to return it back. हमें उस soil के ऊपर लगान वापस देना पड़ेगा. You have to be careful. You can't make it so infertile that after using that data, the customer itself will not be able to use it, right? So we have to be very careful of their data. We have to be very mindful of what we are trying to use. And if the owner of that soil says that you stop using this from next day onwards or right moment, we have to honor that request as well, right? So be careful, because the data can help us to underwrite a lot of things, but it also put a lot of people on risk. Classical case being microfinance, sir. You were talking about some unfortunate events. We always see and experience that, read in the news. So with the data, we can underwrite a lot of things. We can reduce the risk, but we also have to understand that data belongs to someone who is an individual. We might be analyzing on an Excel sheet or Stata or SPSS, but trust me, those data points are of a human beings who live and breathe. So we have to be very sensitive of what we are dealing with. And as we move forward, as we continue to create more data points, I'm sure that there will be more and more opportunities to use that data points for multiple other things. ChatGPT, OpenAI, blockchain, ML, everything is there. And now more and more data will feed in, right? But we also have to ensure that the technology can only give you, say, only work in a binary function of 1 and zeros. The context and emotion is something that we have to build. So just wanted to remind that we are still human beings, and we have to be very careful of what kind of data we are using and what are we using it for. So on that note, I would thank you everyone to be part of it. As I'm sure that most of you would have experienced that virtual reality zone. This is the first kind of in the world that we have used augmented reality for financial literacy. While I'm making that tall claim, when I did the research, because I did the research, so I can tell you that augmented reality has ever been used only for either agriculture or medical services, never in the financial literacy. We have introduced that. So whenever you're using it, just remember it's a first step that we have done. We will definitely improve on that, and your feedback is important. Once you go to the Play Store, you will have the email ID as well. Please make sure that you share your feedback. It's open, it's a public good that Grameen Foundation wants to dedicate to the entire financial inclusion, and also anyone who wants to understand about banking, UPI, ATM, everything. Just go enjoy, play with that. And that is also one of the important tool. I talked about data. That application also helps us to analyze the users database, right? That what kind of experiences are you using, how many times, at what point in time. So if it gives a trigger that if the user is using this multiple times, which means there's a latent need of that product, can we reach out to that customer with that product? Now, this application's premise is that if you're not ready to use the data, you can't use the application. It's very clear. Like, for example, you can't say that I want to use a car, but I won't use the wheels, right? So it's a part of it. If you're using it, you have to pay. That is through data. And that has been made very clear on the top. The moment you decline that I do not want to share my data, the application will close, right? And we have our partner, Satori XR, who has kind of worked with us to develop this. They have done a wonderful work. So I just want you all to please clap for them for this wonderful work that they have done. Thank you so much, team. And also, I would like to thank the entire Grameen team for doing a great job. Without them, it would not have been possible. We have also released around 4 or 5 knowledge products that I would request you to please go and have a look at it, talk about it. If you find something, please share your feedback with us. So with that note, thank you so much, and handing over to Tanvi. Thank you.
Everyone, we now have an hour's time for you to network amongst yourself. Tea is served. I'll once again request everyone to please have a look at the stall that has been put up by one of the women entrepreneurs supported by Grameen Foundation India. There are some beautiful Madhumani paintings kept there. I'd once again like to thank our esteemed panelists, speakers, guests present here physically and virtually, and my colleagues for their active participation. You have been a wonderful audience. And on that note, this is me, your host, signing off. Thank you so much.